so quickly. And we're not done. I mean, there's going to be a big sweep of all these firms because these firms are in many ways tied in with each other to keep the price up. And I know that, and so does the SEC. And they owe us a sweep.
We're going to find out, obviously, more on the 3rd when we see him back in court. Cramer's Mad Dash coming up in the opening bell. Take another look here at the pre-market ahead of the final trading day of the week. Dow actually still on pace for a weekly advance. Back in a minute.
Only in theaters.
We've had a lot of data handed to us this week. GDP revisions and leading economic indicators, durables today, and core PECE. Take a look at the 10-year for the week. Back to 3 3/4, pretty much 2-year as well. Back to above 4.32, as that is going to be a bit of a weight on equities if it maintains. Opening bell coming up in a few moments. And don't forget, you can always catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast. Opening bell is next.
Oh, shucks. Mm-hmm. Good morning. Why do I trade QQQ? My rationale is that we're in an overall down market and techs are taking a beating. So that would lend to that ETF probably also reflecting that downward trend. So that's why I picked QQQ. I picked the ETF because why not? I felt like it was a little safer than maybe one single stock. You know how news can tank one stock like Tesla can have? Well, Tesla still has some impact on QQQ, but Apple can have a really bad day, but QQQ kind of absorbs it all. So I kind of felt like that was a way to maybe hedge some of the volatility, while also it's high in liquidity. It's got great, volume, and it moves, it's active. So there were many reasons why QQQ was attractive to me. But then let me introduce myself. My name is Sandra, and welcome to my channel, From Lack to Legacy. On this channel, we're all things money, investing, and mindset. Particularly how to go from a scarcity mindset to a mindset of abundance. And I'm a new trader. I've only been trading about 4 months. So I just opened up my kitchen to create community so I wouldn't have to trade alone. And I learned from the people in the community. So it really is, it was a way for me to learn. It was a way for me to share, not trade in isolation. Being a new trader, it can be a pretty daunting task. So that's why I trade QQQ, and that's kind of why I established this forum so that we could come together. So is this your first time with us? If it is, welcome. The opening bell is about to come, so let me steady my mind and get right.
Let's get Kramer's Mad Dash as we count down to the opening bell today.
Oh, tight. I want to put this on the 5 minute.
DirecTV.
But those are some of the reasons why I picked
the
QQQ.
Analysts, I think, don't know really how to cover it. They're all kind of mixed about it. Even a great Deutsche Bank piece still saying they don't know.
Okay.
They struggle to identify a clear path for the deal to be immediately.
What do you
I think
trade?
they're missing the point on two things. One is that it's
Morning, Frank. Lunga, what do you trade? And if you're new, please subscribe while you're here. Don't forget, hit the like button and all that other stuff. I know it seems like a tiny thing, but it's a huge thing for me. So please join our community. Feel free to ask questions, contribute to the conversation, all that good stuff. That's what makes us us, because everyone is welcome and everybody has something to contribute. I'm trying to get my
pricing even for things that go on in the fourth quarter for when you need to really.
You don't know what I'm looking for.
Your players are playing, and to isolate
Robinhood, so I can check on. I want to see a visual QQQ.
They get the DirecTV.
Yeah, I know what I'm doing.
I think they'll do great things. I believe that
well then.
And say this was.
What do you think it does to time spent on Roblox, Snap, TikTok?
Oh Lord, is it gonna be a continuation of yesterday?
Netflix, the big streamers. Do you think it moves the needle on some of those to the downside?
During the season, I think that you have 55 million people who
let's
play
see.
the game of
Everybody's
of
down.
I think that will go
Tesla.
up. The Roblox numbers are very discouraging. The Snap numbers are discouraging. I think
So everybody is down today. Good Lord.
Okay, that the real
Could it
numbers
be?
are okay, but that Alphabet is trying to
Let's see.
change its stripes.
So you
We
think
gonna
maybe
see.
net positive for the DraftKings and the Pens?
I am new this week, started trading 2 weeks ago, and I've been doing Tesla and Amazon. I like Tesla. Tesla's got a lot of movement. It moves a lot in a day. I'm not familiar with Amazon. Good morning, Johnny. Good morning, everybody. Welcome, welcome, welcome. If you're trading something, drop it down in the chat. Let us know what you're trading today. Lunga, well, welcome. I'm a new trader too, so you're in the right place. And I'm literally like less than 6 months, so I'm learning every day. I just chose to not learn in silence and in shame and in the darkness. I'm learning in the light, and I'm learning more, to be honest with you, as a result of opening up my kitchen. You know how sometimes when you learn something new and you're not good at it, you want to hide because you're not good at it? Well, my good friend Stephanie Perry told me to practice out loud. She said all the videos, she said they're gonna be terrible in the beginning. It's okay. Practice out loud. We have to give ourselves permission to not be experts. I am not an expert at this, you guys. Y'all see me struggle every day, mainly with myself. The market is a whole lot easier to figure out than managing my own emotions and making good decisions. So welcome, you get an inside peek.
And it's not going to trade off.
That's a journey of a new trader and a new trading community.
To do things where they don't make money. And I wonder whether it'll affect their worldwide root structure.
Learning in the light. I love it. Yes.
I'm not so sure they're going to do that.
Yep.
I think they may find places where it's just not
Don't learn
economic.
in shame. Nope.
Interesting. FedEx, if you missed it
No
this morning,
sense.
did
I
say,
learned that in kindergarten. I
some
learned that from
holiday
teaching
packages could be
kindergartners.
delayed,
You
interruptions
get
in
way
service
more
from,
out of people if you give them
EST
permission to
with
make
weather,
mistakes
but
and be
also Tim reports that
human
DoorDash
and
said
flub it
deliveries were
up
and
and
obviously the
just
airlines,
really.
4,000
Yeah,
flights canceled.
again.
Because if you don't give yourself some grace trading, you'll be one of those people who quits and says, all traders lose money. Well, all investors lose money. Let's be clear. Check the market. Check anybody with a 401k. Let's be clear. If you're investing, investments involve risk. We try to educate ourselves and manage our risk. Good morning, L. Oh, I said good morning to everybody. Did anybody else? Did I not greet?
I know, I believe.
If you're new again, or if you're watching this in the replay, my name is Sandra, and welcome to my channel From Lack to Legacy. On this channel, we're all things money, investing, and mindset, particularly how to go from a scarcity mindset to a mindset of abundance. If that sounds like something that you're interested in, please stay. While you're here, don't forget, hit the like and subscribe button, share the channel. We want our community to grow, because certainly when we have more minds, we have more ideas. It's just a win-win for everybody. The community grows, we grow, we become better traders, all this good stuff. I'm here for it.
Was interpreted as saying that. I went back to Brian and he said, that's just not true.
Anybody trading today? I don't know what I'm doing. I'm watching basically because I don't know what to expect. Yesterday was bananas and bonkers. It's a good day though.
I think it's a good company. I think Brian's done a lot.
It really was.
We mentioned obviously.
So let's see, where are we?
The Sunday ticket.
6,
Implications
5,
on gaming
7,
and time spent on
5.
social media. Microsoft responding, giving a rebuttal to that FTC lawsuit about Activision.
Well, good luck. I was reading the FTC. I was reading a Harvard Law Review piece that Ian Kant wrote, and it just doesn't want deals. And I've read, anyone who's read if you've read the report by the judge on the Simon Schuster Random House, you'd realize that they are finding reasons to block deals. No, people who have not written books yet might find that they will not, when they go with their agent, get as good a deal.
Y'all, I peeped in on Stephanie's writing in the morning. Stephanie is a genius.
Microsoft.
She's writing a book, and other writers join her in the morning. It's like a co-working, but for writers, and they're sitting there writing in silence. What? Oh my God. Genius. That's genius.
Repeat themselves over and over again.
Because you still get the task done, but it's so much easier when you have somebody there with you, you know, like an accountability partner. And there's so many people who are trying to get things done. It's not just writers in that group. Shoot, I was in there and I was prepping for this morning. I was prepping the other morning and just, you know, bopped in just to say hi. It's just, you know, the whole thought of having an online community to help you or to, you know, to go along with you on a journey is revolutionary. For me anyway. His price is jumpy, 26472. Yeah, let's let some of that clear out.
Speaking of armaments, did you know that AeroVironment makes the best drones? It's a little off. David would say, Jim, where
I don't know, y'all.
But they've got a fraction of the orders they could have.
We're gonna see.
When you read that there's so much going to
Let's
Ukraine,
see.
a fraction of the switchblades that are very lethal toward the Russians are being sent there. They're not being bought. AeroVironment's numbers aren't that good because they figured that the U.S. government was going to buy a lot of this product. They're buying a quarter of what they could buy. And people who are in favor of Ukraine should tell
everybody is down.
There are weapons that could be bought, but they do have a further distance than the Javelin. A 90-kilometer distance could mean, again, people are so, our government, Jake Sullivan, so the guys really run the war, so afraid of missiles that could go and hit Russia.
Yep.
But anyway, I just think that but the combinations aren't working, and this, it is incredible. The AeroVironment is not being given the go-ahead.
So on Activision, do you give the street credit for that ARB spread, basically signaling what we've run into now?
Yes. Yeah. Yes. Oh, look, these people are hiding in plain sight. When you read the report, when you read the opinions of the judges, and when you read the plaintiffs, the government blocking them, it's always the same, which is that there's been way too many deals in this country. The deals have been anti the consumer, anti the person who's going to write a book, anti the person who's going to write a game, and it's very persuasive. If you get a Democrat judge.
Wonder if that's behind some of these headlines. For example, HPE, according to Deal Reporter,
That
ending talks with Nutanix.
That's smart. I mean, I think that there's a disbelief that these people in the government are going to succeed in these lawsuits, and I think it's grave. They're gravely wrong. They're going to be the lawsuits are going to be horrendous, and they're going to have gravitas because we have a government that's very anti-merger.
Yeah, Nutanix down almost 11% this morning.
Sure.
Ticker NTNX. Jim, oil's another story. Some supply worries once again. Russia reports that it might cut production 7% to combat the price cap. We got back to close to 80 this morning. On Texas.
When I had Russia Brazil as my expert on, he just said, look, a recession is what drives things down. If you don't have a recession, the natural progression is for it to go higher. $90. A recession takes it down, but if we don't have that and China starts, but there is a great misperception in China. There's perception that they would use 2 million barrels more if they really open. It's 2 million gallons more, so it's not as important. But a recession is going to determine the price of oil, and oil goes higher if we stay out of recession.
Yeah, there was a good piece about China's use of oil, that they don't use a barrel of oil the same way that we do, and that if they reopen, it might be net bullish, but not to the degree.
Exactly. No, it's actually our country's economy is strong. And oil is going up a lot. Natural gas obviously coming down, but it's the weather.
What's going on? Nat gas worst week since 2014.
I know it's supposed to go to $9. All wrong. Most of the prognosticators in these things have been completely wrong. But I do think that when I look at oil, I think it goes higher. And it's not just because they're filling the SPR back, because the president doesn't believe that the SPR, the Future Petroleum Reserve, has to be filled like it used to because we have so much oil and shale here. But remember, the oil in shale has to be drilled constantly. The oil that Russia has is deep water oil, and that can last a long time. And they don't need the technology that people keep saying they need because they have a very long life assets. They don't need American technology right now.
We had Brian Deese, National Economic Council Director, yesterday, and we asked, have you gotten any expressions of interest on that bid? And he said they'll have more to say in the coming days.
I hope so. I wish that they would sit down with the oil people. I know that that's not something they care for. Look at Tesla down. This is the same theme I'm coming with, which is that the people
I can't fool with Tesla.
feel they've been hacked. And it's to some degree.
But I am going to get these puts today.
In the leaders of these companies, not unlike me. I still believe in Tim Cook. I don't think the core is good because Costco told you they don't have enough supply. But the people believed in these companies, and they believed in the CEOs. The CEOs were great salesmen. The CEOs did what they did. And they got believed. To some degree, I blame the people.
Well, Elon Musk would blame the Fed. I mean, that's his big argument, is that there's huge macro headwinds at play here. As in his words, I think if I wrote this down right, there's stormy weather ahead, but there'll be sunshine thereafter.
He's a weatherman. Terrific. Has a lot of jobs. No, I mean, look, his sales mattered, but Ford's sales mattered. Ford Mach-E and the Ford 150 are going to be real competition for them. It's real competition.
I'm going to be on my orders.
And I've been in the
so
gym.
I'm going to take y'all off for a second.
Those are very good.
Tesla needs some accountability. My goodness, yes, indeed.
And they sell everyone they can make.
Well, that's the big question.
No, they had a YouTube live. I missed it. It was interesting. I only caught a bit. Kathy Woods and the former CEO of Twitter was on the live with him. They were talking about cryptocurrency. They talked about cryptocurrency. They didn't talk about how he's killing these two companies. Every morning, Tesla falls out of the bed, apparently. On the live last night, Elon said he's done selling Tesla stock for now. Markets could flush some if we take out yesterday's low. That's what I'm looking at. I'm looking at yesterday's low.
But I think that Ford's been a terrible stock, in part because they're switching. and it's difficult to switch. But when they get it right,
That's a heck of a chart right there. And I only say that because I always think back to the period where Tesla was valued more than any other OEM put together.
it was a great time. It's a great time for retail investors. But that time ended. It's not a great time for retail. I'm sorry. I'm working on my top tonight, and I'm saying the retail investor, I don't blame her. That's what I'm saying. I'm saying I don't blame you.
Let me go look at Tesla. Oh, I just don't like. Yeah,
you did terrific.
I don't like their
You bought the stock of something you liked and used.
I don't like their contract prices.
That was a great way to do it for a while.
Check out Forward.
I like Etsy.
Everybody doing the same thing. Oh,
I think 130. No, but I like Etsy. I like Uber, but 25. No, I mean these prices still have nothing to do with what the companies do because they don't make money. You got to make money. That's key.
And so,
How did that ever get to be key?
And you're not calling for. You're not making a call as to whether or not Tesla goes into the double digits at this point. Or we're 20 bucks ahead.
No, it won't do that. Etsy won't because Etsy's going to make $3. I mean, look, Tesla's very profitable. It's just that we have to try to relate the profitability.
You don't think Tesla could go under $100? I think he could run that company right into the ground.
30 times earnings was considered to be inexpensive, and now 30 times earnings is expensive.
Markets could flush some if we take out yesterday's low.
Is that
Johnny, what do you mean when you say flush some? I know what yesterday's low was. I got it marked down. But what do you mean the market could flush some if we take out yesterday's low? I don't understand what that means. I hope that means tank.
Well, if you're watching Smucker and utilities, then that kind of tells you what your
think Kellogg's inexpensive. I think Campbell's a terrific stock. I mean, great. I thought Zoetis. I had Zoetis last night. They do a lot of companion animals. They've been hurt by livestock, but I think that's an interesting company. But we look at that Kellogg. That is terrific. By the way, General Mills. Whoever sold General Mills
last night? I wish I had seen that. I would have sure tuned in for that.
Because General Mills had a fantastic quarter, and it sells at 20 times earnings. Needles in a haystack? No, there's a haystack filled with needles, but it's the right haystack. Got to be in the right haystack, and it's not software. Look, I think that enterprise software. When you go meet a private equity person, you say, "What do you work on?" Oh, enterprise software, and now you laugh at them. Before it's like, "Wow, you could be the man."
Yeah, I mean, I'm just thinking back to the last couple months where we did see a wave of upgrades for ServiceNow in hopes that maybe these lead cycle times were coming down. Obviously year-end scrutiny on deals, but hopes for 23.
Well, it sells at 51 times earnings, so it didn't work. Much as I like ServiceNow, it didn't work. I just, if it sells at a high PE, we're back in the world where PEs matter. And if it has a high PE and it doesn't return capital,
I think I may have to take this party outside, y'all. I've been in the house.
Next year.
Oh my God, it's killing me.
CRM.
I need sunlight.
We have to get.
But Mexico is so noisy. You all, it's so loud. Let me go check and see if they're giving swim lessons in the pool. Because if they're giving swim lessons and the kids down there doing the belly flop contest, it's joyful, but it's noisy.
If you felt.
So let me go see if they're doing the cannonball contest today.
And he was very smart by just saying.
Paradise has its drawbacks. Flush, hard sell, yes. Quick sell off, yes. That's what I need. Okay.
Don't fight the feds.
Yes.
I want to recommend everything.
I'll be in and out of to live today. Right now, things are just randomly choppy. Yep. That's what I'm about to do. I'm about to go check out another setting. I think I'm gonna see if I can get outside if it's not too hot.
Jim,
hold tight. I'll be right back.
I want to take a moment to thank Peter Schack now, one of our
again. This is just better for my mental health, honestly, to be outside. Okay. Good morning. Happy holidays and fat pockets to you. Same to you, bumpy fat pockets to you. Solid advice, Johnny. Johnny says he don't want to get in that chop and give back profits. I know that's the truth. You see me sitting on the sidelines. I'm minding my business. I'm trying to get comfy because I'm telling y'all, trading in the house all day is not, that's not, the benefit to this job is that you can do it outside. You can do it anywhere. So I have to get outside, y'all. And it feels so good. Oh my goodness. But y'all know it's noisy. Is my sound muted? I don't know. Is your sound muted or is the sound muted because I don't hear anything? I don't know. Can you hear? Oh, Lord. Tell me you can hear. Can you? Can you hear? Has been doing very well for me. Okay. I can hear. Okay. I was about to say because I don't have any indications that I'm offline. I think I'm cooking. All cylinders should be firing. Oh my gosh. Let me put my feet up.
We see ya.
Okay.
S&P laggards for the week, kind of a reminder of what has not worked this week, namely some chips, some travel, but nothing worse than Tesla extending its worst drawdown in history, worst quarter ever, over a 2-year stack, worst decline than Bitcoin on Tesla, now just above 121. Take a break here. Be back in a minute.
I'm going over to Trader TV because they give you more intel.
That they're going to continue. There are going to be new new functionality, new things that I think are going to take them next level. And if it doesn't come out with this next generation, it could be for the following generation, provided that they're ready at that particular point. And that happens a lot where they say that, it's ready now, and then all of a sudden they hit some bump in the road and it gets pushed back further. So there's a lot of particular innovation that's going on in these two areas. But, can't forget the Mac as well. I mean, that Mac put them on the board as well. So can't forget that.
Okay. How does the defense sector play into your views, Achilles? Tell me about a company like Raytheon. Is there as much of a growth element to this, or is this more about having a steady, reliable cash flow? You can always count on the government when we're printing 1.7 trillion every other month.
Yeah, and with the recent contracts that were settled for the defense industry, it's going to go up. And they're a direct beneficiary. I mean, Otis elevators, carry air conditioners, Osprey, the helicopters, space technology. This is a company that covers a lot of bases. They are another dominator, defensive in nature, decent dividend. A grower, has shown resiliency this year in particular. I mean, it was up at one point over 20%. It gets pulled back down. But at the same time, we're talking about a solid company, solid growth, anywhere between 7 to 9% in the next 12 to 18 months. But we feel that the story is that growth with the dividends, with the industry as a whole being super defensive in good and in bad markets. This is just a stock you want to add to the portfolio. You don't have to have a lot of this, but this is definitely a stock you want in there that's high quality and will go up further.
All right, there it is. Some conviction this morning. We welcome it, Achilles. Thanks a lot for being here.
Thank you.
All right, let's do some trading. I got Tom standing by, getting all bulled up after that language, Tom, even though we're making lows in the market right now.
Yeah.
All right, Raytheon, what do you think? What's the right approach as the stock is much closer to its highs than Apple, of course?
Yeah. Anytime you're looking at a stock that's positive on the year with a down market overall, you get concerned there. So looked at something a little bit more conservative.
You get concerned, you get excited. You not hear Achilles?
I know.
Achilles, man.
I love when he comes on. I've interviewed him a couple times. He's always has that conviction towards the names that he picks out.
Especially when you got the Top Gun B-roll going there.
Yeah, of course.
Okay.
Of course.
All right, what do you got?
So I looked at something a little more conservative. Take advantage of that 2.2% dividend yield here in Raytheon. So I looked at a covered call going out about a month's time to sell an upside call against buying shares. This might be a way to, you're getting paid to wait basically on this type of strategy where even if it goes down a little bit, you should still be okay. You'll have that ability to roll a short call repeatedly, creating credits. But buying for every 100 shares stock you buy, sell one of the January 100 strike calls against it. You're paying a debit of around $96.70 for that, maybe a little bit lower as the stock's kind of fallen a little bit. But that would be your break even. So you're buying the shares at a discount. You're able to collect that dividend yield because you are long shares in the stock, and then that ability to roll that short option repeatedly, collecting credits, which offsets some of your risk every time you do that and increases potential profitability on that. So if you think it's going to stabilize, maybe grind up higher a little bit or even go a little bit lower, this stock, you get paid to wait on this type of strategy.
Okay. All right. So not the most aggressive approach, but, it's one you can feel safe, at least in the stock. How about for Apple? Yeah. You want to buy the dip here?
Yeah, a little bit more aggressive here.
Okay.
If you think it's going to continue. Remember, the 52-week low in here is about $129 that we saw in June. So getting back towards that potential support level. So on Apple, you kind of want them to get through those supply chain issues that they had going into the holiday shopping season. So I pushed this example off a few months, all the way out to the April monthly cycle. So giving myself some duration in here. Okay. Buying something deep in the money, the 125 strike call. It's got the higher delta. It reacts more like the stock. And then against it, sell the 150 strike call. So you're creating a $25 wide bullish call vertical to the upside. If you're paying roughly about an $11.30 debit on that, it's probably below $11 right now because the stock has continued to move lower. But if you pay $11.30, that's going to be your risk, $1,130 per spread. But that if you get back to that 150 level, if maybe they come back on in January, at the end of January when they report earnings, say, hey, we're getting through some of these issues. It's never been a demand side problem for them. So if you start seeing that pickup back in the iPhone 14 and iPhone 14 Plus sales, this might work out. Your break even about 136.30 over the next 119 days. So there's that duration I talked about. That's only about 4 to 5% above the current share price here in Apple. 4 months for Apple to go up 5%. We could see that in one day on any good news in the stock. So a little bit more aggressive, high delta, bullish call vertical here.
Okay. So a little more aggro, looking for Apple to bounce at the low lows. Yeah. I mean, we are there. It's a hairline between here and new lows for Apple. Okay. We still got, not that many trading days. I guess 10 trading days. Well, we got 5, really. Less than that. 4?
4 trading days after today.
Wow. Okay. Yeah. We'll see where Apple can go. Mm-hmm. Thanks, Tom. Thanks, Aquiles Larrea. Coming up, we'll get updates on the housing and consumer sentiment figures. Ben's going to join us for an economic briefing. Stick around.
did put some. I didn't get mine yet.
Let's walk through
I'm
charts.
waiting.
One of the most
Good
commonly
morning,
used features on
Shauna.
thinkorswim.
Good morning.
Start by going to the Charts tab and entering a ticker symbol. Select
Happy
time
Friday,
frame to adjust
everybody.
time
I didn't
intervals
go
or to
in yet,
favorite a
Frank.
time
I
frame.
didn't buy yet. I'm
Select
just
style
looking.
to change
It
the
did. It
appearance
did
of the
that
chart.
pop-up thing. It kind of.
You can add drawings by
gonna
selecting
wait.
drawings, drawing tools, and then type of drawing.
Till I can really see.
For symbol comparisons, select studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
When traders tell us how to make thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim Trading from TD Ameritrade. It's a 13-hour flight. That's not a weekend trip.
15 minutes away for me.
Take off.
Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see you. They're getting so smart.
Choose the app that fits your investing style.
Welcome back to Morning Trade Live. I'm Oliver Rennick. We are in hour 2 of the show. 30 minutes of trading has brought stocks lower. We did get a couple decent numbers here that we'll talk about: new home sales, consumer sentiment as well. Perhaps a little bit of a better combo than the PCE plus durable goods this morning. That was a pretty nice little snapshot of stagflation. Declining durable goods, revisions higher for inflation. Market didn't like that. Tried to pop early, sold it off hard. Yesterday's big drop still outsizes today's move, but we are seeing some pressure with the NASDAQ down about 1%. We'll talk about the data. We're going to discuss volatility with the really good options analyst joining us from Mizuho. We'll talk recession, inflation as well with all of our guests, as that remains the main subject, of course. Has inflation driven us to recession? Or will some of these numbers, like in housing, suggest that maybe there could be some recovery happening? Let's bring Ben into the situation. Let's talk about the numbers. New home sales, Ben. You know, we've been talking a lot about housing and how it seems like the group has been shrugging off data for, 3-4 months, really. That has not been extraordinary, hasn't been great, but maybe has been understood by the market at this point, perhaps?
Understood, yeah, in terms of coming off of really unsustainable levels, probably in terms of purchases and new homes, existing homes changing hands, and then also understandable in terms of the rates and the move up that we've seen in terms of 10-year yields and mortgage lending rates. Now, as you take a look at new home sales here today, though, a bit of a surprise. Keep in mind, last month we'd seen the 10th month in a row of declining new home sales. Here you can see the annual rate had a bit of an uptick up to 640,000 from expectations where we would see 600,000. Prior got revised to 605,000. Taking a look, this is a 5.8% increase above last month's reading. And you can see they were actually looking for a decline of 4.7%. Now, as I look here, it looks to me like the U.S. Census Bureau and the U.S. Department of Housing and Urban Development said that while sales of new single-family homes in November of this year. Again, at a seasonally adjusted rate of 640,000. Oliver, we're talking, again, a 5.8% increase. Now, again, I just want to stress they were looking for a decrease. I also want to point out this is a 15.3% below the November 2021 estimate of 756,000. The sales price of new homes sold in November of this year. Again, last month, 471,200. The average price was 543,600. Now, in terms of inventory, Oliver, seasonal adjusted estimate of new houses for sale at the end of last month, 461,000. This represents an 8.6 month supply at the current sales rate. So that was a significant uptick as well. We also had our sentiment numbers here, and these were pretty strong. And I think what gave the market a little bit of an uptick was the bottom two lines here. Again, follow through somewhat limited. We're actually kind of rolling back over here, but we rallied back up to 38.38, about 20 points off the low, right when these numbers came off. But we're having a hard time holding it. And I think that the focus was the downtick in terms of inflation expectations, not only the long term to 2.9% from 3, but short term 4.4 from 4.6. Look at these numbers here. Pretty strong for the most part. Sentiment at 59.7 versus prior levels of 59.1. Expectations top prior. The one that did see a downtick was current conditions. But again, I think the focus here being these lower two inflationary components here of this number, definitely looking here at a bit of a downtick. So let's keep an eye on the market here, though, in terms of hanging out just a matter of about 6 handles off the lows here, but just kind of digesting some of the information. I'm not sure really if the market knows what to make of the numbers earlier this morning or here right now.
I think, too, also to some extent, even with the surprise in the home number, though, we've been kind of seeing that the last couple of weeks where the housing data is kind of repairing itself a little bit. That's what happens when rates drop, well, like they did so hard last month. So to see some of that come back, I think is part of the, the yo-yo that's going on, where we go back and forth, but we trend in one direction.
And, I've been making the point, too, in terms of labor conditions remaining pretty strong. I think the weakness in the housing is going to be limited as long as we all have jobs, right? If we start to see that falter, then we could see things accelerate. But again, how far are they going to go down? I mean, we all need to have homes to live in, right, ultimately. So,
well, that's the Fed's thing, is that they've, decided they're going to target employment. So for me, the housing data, it might be decent for some of the housing stocks when they've had a good 6 months and they're doing okay today. But it also tells the Fed that they're okay to keep chipping away. So it's one of those data points.
The strength in the labor market.
Exactly. Yeah. I think it's one of those data points that will kind of always be good as bad in a way. Some of the other data points now, like durable goods, people are going, okay, this is not good. We're not going to try and buy stocks on this. Like they tried to this morning, and we faded back hard. Consumer sentiment, housing, these to me are things that just embolden the Fed to keep doing what they're doing. Durable goods, or if an employment print bombs, then that might make them slow down a little bit.
Well, in terms of analyzing all this, Oliver, you know me, I think I like to take a step back. We're getting kind of contradictory data. And as I look at the market right now, we've got the lows that we saw this fall around 35. You've got the upper extreme highs from August around 43. We're just now making our way through 39 to 38.50-ish here. You can see where things stand in terms of some of the other products. The dollar getting a little bit of some selling here, which is interesting considering stocks are selling off. The dollar was a little bit higher here this morning. It's turned around quite a bit. Gold hanging out around 18. But yeah, I mean, we're relatively contained in this range as we digest this information heading into the end of the year.
Okay. And the one where there is some conviction this morning, crude oil to $80.
Yeah.
WTI up 3%. All right, thanks for the update, Ben. Let's talk energy. As prices have recovered here, crude's still well off the highs for the year, but now adding in some questions about what inflationary force there may be if China reopens, if there's demand from that economy. Michael Keeley joins us from Salt Lake. Mike, good to see you. Welcome back to the show. Energy prices higher this morning. Crude is showing a good bit of strength here the last couple of weeks.
It absolutely is, Oliver. And I'm just going to continue this theme that Ben laid out of, the contradictory data, the cross currents that we're seeing. Because on one level, you have weather impacting the near-term outlook for gasoline consumption in the U.S. with over 4,000 flights that have been canceled. The thought being, well, that will certainly curb, the traveling that's taking shape that, on the roads and that sort of thing. But you also have the bigger wild cards of the Chinese economy, and that's number 2 in terms of world oil consumption is in China, and with the surging COVID cases, that's thought to be a limit to the demand side of the equation here. But then you have that optimism that surfaces usually on the heels of that, and the thought that once the gates open up there in China, then optimism prevails, and that reopening should lead eventually to more demand. And that, on the cross-current side of things, even here in the U.S., while we've got the weather impacting things negatively for the demand side, the other aspect is that cold weather certainly will influence the heating oil that's likely to see a real surge with the cold temperatures that are occurring. So on the one level, we have, the U.S. side of the demand equation that's got those cross currents. But I think, Oliver, that's near term. And when we step back and we take a look at the performance of the energy space, it stands out very in very sharp contrast to the rest of the market. That energy has been extremely strong over 6-month timeframes, over 1-year timeframes, and by that I mean the companies themselves within the S&P that constitute the energy sector. Now, when we take a look at the high level, Oliver, we can't ignore
Congratulations,
the
Ms.
side
Vice.
of,
Ms. Vice is
the
out.
equation that deals with Russian
Way to go.
supplies, and so that's
I guess you
the
could go and
other
enjoy your
part that
weekend.
we're wanting to
If it
address
pulls
here
back, I might grab
is
some
the
more. Yeah, I'm just
exports,
watching.
that are thought to fall by 20% in December from the prior month, after the sanctions have been imposed and the price
Hey,
cap on Russian
Katrina.
crude. And so
Hey.
we've got
You see me, I'm all into it.
some news
Hey,
here
welcome,
that I think is
welcome.
very relevant.
We're live trading.
To
So
those that
I
are
was
looking
just
at the
off to
oil
the side,
space and
checking
the oil
out,
traders
trying
with
to get a
Russia,
good entry,
having their response
trying not to
now,
lose my
saying,
shirt,
well,
fooling
we're
around with
going to cut
QQQ.
oil output by 5 to 7% in
Congratulations,
early
Ms.
23.
Vice. That's how you
In
do it. Get in
response
and
to
get
the
out
price
early.
caps, this was
Let me keep
Deputy
looking
Prime
over here,
Minister
y'all. Hold
Alexander
on. I'll
Novak
bring y'all
from
back
Russia,
online to
of the
QQQ in
RIA
a second.
news
I just need to
agency,
check and see
being
where I am. I
cited
might need to get out. My
today,
entry may
and
not have
this
been
is
the
for the first
best.
time. He said
So I'm just
that
looking
the
to
cuts
see.
could reach 500,000 to 700,000 barrels per day, and so we're seeing a lift
RSI coming
in response to
down.
this.
So it seems like right now a lot of the bull case is being formed by artificial supply side decision making. And maybe we haven't even seen the China demand reopening kick back in yet.
This is true. Yes, I would agree with that. And, Russian President Putin said he's going to, issue a decree in response to these price caps. And so that would ban the sales of oil and oil products to countries that joined the price cap. And he said, we've been diversifying away. We've thought ahead of the curve on this. But on the other hand, you've got, India and China that are struggling to find enough vessels to carry the crude that they need. And we take a look at the impact here already being felt, certainly, and there's only 4 countries that are willing to buy Ural crude in December. And that's a new low point. That's Bulgaria, China, India, and Turkey. And they're selling that at an overall cost that is below what had been anticipated by a lot of the, the oil analysts that are out there. And so, we've got a lot to contend with as it relates to this. But, to the graphic that you and Ben were assessing earlier, energy, oil is certainly one of the bright spots at this point in time in an otherwise fairly lousy market environment in terms of trends that we've seen across a lot of different areas.
Bad entry today.
We see that oil is rallying very sharply today.
Yeah.
And so traders have a lot to contend with. They need to bring
I
all
should've
this
stayed my butt on the
into their
sidelines
equations. And
till
so,
11 o'clock.
I describe this as cross currents. There's a lot of volatility that's probably being anticipated, and we'll see what plays out.
Yeah, it's pretty springy off $70, getting back through 75, seemingly puts some pretty interesting levels back on the table after such a hard sell-off at the beginning of this month. Now that we're back up above 75, which was a low from September, trading in the 80s, maybe we push up to 90, which was the previous high. This thing has a habit of going back and like testing to the tick the previous high before it then rolls over like it has since the summer. Good context, great stuff, Mike. Thanks for the update here. Appreciate it. Hard to keep track of all the different policy measurements happening in crude, but right now it looks like they're shaping up more for price support. Let's bring in Dan Deming, Managing Director at KKM Financial. Dan, you're looking at the stocks because they have done quite a bit better. How do you approach a stock like a Halliburton near the highs still?
Yeah, Oliver, I am. You're starting to see some dispersion within performance within the sector now. They all benefited in 2022, but going in 2023, I think you got to look at the service area, and you're seeing relative strength in Halliburton and Schlumberger, both of those outperforming some of the other big names within the sector. So I'm looking at a potential play here on Halliburton going into the first quarter. It continues to maintain this upward momentum. And I think there's a possibility we could see a pushback to the highs that we did see earlier in 2022, right around that 43 level. So what I'm looking at, Oliver, is basically, again, participating to the upside, but also putting on some type of risk mitigation due to the fact that when we do see oil and we do see prices come off, these stocks fall very hard, very fast. So I want to have at least some downside. So really what I'm looking at is buying the stock here, Oliver, in this trade example, and then putting on a risk reversal where you sell a call and buy a put out in March to kind of, again, cover some of the risk metrics of getting long the stock.
Okay. So the 33
been entry for me as well. I know, but I'm gonna chill because I may have to swing it because I have learned,
so basically
Frank,
you're looking at $5 either side
swing
of what the
it,
stock's trading right
because
now.
we already know
You can put that out for
QQQ will
credit,
take
which is
a
interesting. So the
dip.
$5
That's why
right below
in the
on
money
the
and
put side is actually the
time
lower vol
for
than the
new
call,
traders,
which,
I think is
I guess
important.
because of the nature of
So when
how
you
these
get it
stocks have
wrong, if
performed
all
this
else
year.
fails,
But that's a
but you
rarity,
got to be
and
willing
so
to
that's
stay in that
to me,
swing
that's a
too,
potential
till
opportunity.
it comes
So you can
through.
actually put
I
that risk
don't
reversal
know.
on for about 20-cent credit.
Every
So you get
every
paid to put that
swing
risk
that I've
reversal
sold
on,
out of,
and
I
then
wished I
again,
had, and I wish I had just let it play out because eventually it gets there. So I'm just gonna we're gonna see. I'm gonna test this theory today. I hate to do it, but I'm gonna show test this theory today because I'm gonna hang in here. I got enough time, and I got a decent delta and stuff. So we're gonna see.
Roll that call. So again, you're playing for the upside now. If it explodes,
I don't even want to
higher, then you're not going to
discuss.
participate above 43.
You're
So
not
that's
the
a
only one,
potential
Frank.
limiting
Bad
factor
entry
on
for me
getting long the
too.
stock with the risk reversal. But again, I like the idea of having some risk mitigation in place. If we do see a breach below 43, or excuse me, 33, which was just recently in December, we saw a trade down there. That at least from that point below, you have something in place to kind
we'll see what happens.
again,
Let me look
mitigate
at
some of
it
the
down
downside
on the
risk.
3 minutes.
All
See if
right.
there's some hope.
Nice. So
Maybe this
interesting
will end
approach here
soon.
that would certainly work out
Oh,
to hedge stock position,
sorry
or
about that.
just to speculate that big gap between the commodity and the stocks closes in the direction of the commodity.
Yes, maybe this will
All
save
right,
us.
thanks,
Maybe
Dan.
this 50
All right, Oliver.
and this
We'll see you in a
200 will
couple weeks,
save us.
Sounds great.
All
Yeah,
right.
Merry Christmas, Happy New Year, Happy Holidays, everybody.
Likewise. Thank you, Mr. Deming.
Please
All
don't
right,
tell
stocks
you that.
are making a move here. Seems like the data was able to put in a floor for the market as we're responding to a decent consumer sentiment and some improved new home sales. Maybe good data is good again. This morning, the bad durable goods data was pretty bad, so perhaps markets are righting themselves from the topsy-turvy, upside-down investing of bad is good and good is bad, moving past our inflation and Fed obsession, perhaps, to a truer analysis of the economy. Maybe. Let's talk with the great guest coming up here that's combining some of these macro concepts with the
Thank God
options
for a
and
50
volatility analysis.
and a 200-day moving average. Hallelujah. Well, she was going for it. 265.60. Oh, Lord. She going for it. 265.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcast and start learning today.
I'm Nicole Petalides coming to you live from the New York Stock Exchange every single market day, from the opening to closing bells. Tune in to the TD Ameritrade Network.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave them Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them.
Welcome. I'm watching QQQ as usual. And I'm about to go behind the scenes. I'm about to put y'all on silent so I can go look at this money. Oh, Jesus, keep me near the cross.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
VIX is down today, just a tad, still hanging out in the low 20s after waking up in yesterday's sell-off. Let's talk volatility and its connection to our macro discussion with Laurent Laskowski, Director of Derivative Strategies at Mizuho Americas. Laurent, great to have you here this morning. Thanks for joining us.
Yeah, thanks for having me.
What stands out to you most in the world of volatility right now?
Well, I think when I'm looking at volatility, and I think I'm thinking of your previous guest, I really like where he's going with his risk reversal. What stands out to me here is really how flat skew has been, relatively speaking, all year long, and particularly going into next year. That is to say that calls are historically expensive versus puts, out of the money calls versus out of the money puts. And I think that going forward, going into the next year, where there is a lot of pessimism and potential risk to the downside, investors may want to look at overriding strategies, generally speaking, trying to sell these upside calls and really look at potentially three choices there, right? Either just keep the premium from themselves, just getting some yield and harvesting yield, making additional income in their portfolio, like your previous guest, buying downside protection if they're bearish, or potentially if they're mildly bullish, with their covered call, taking the proceeds of the call and buy an additional, call spread to the upside for maybe a faster recovery, just benefiting from like maybe a slight upward move, towards, next year, without necessarily needing, markets to go at like all-time highs to just recover the losses of this year, for instance. So yeah, that's really what we're looking at right now.
Why is that skew in put call prices happening the way it is, with calls being more expensive in a down market? I mean, are we just like that stubborn, or people just keep thinking it's going to turn around, or what?
Sure. So I think that there's a little bit of that. There's like this idea of risk to the upside. I'm not entirely sure that people are really thinking that the market is going to turn around, but rather I think that market participants, have sat that one out, so to speak. Right? They've been like conservative for a fair amount of the year. Positions are pretty conservative towards bearish. And if your portfolio is really conservative, I guess, the risk reward of the market is more balanced downside to upside. And so you might be just a little bit concerned here going into the next year in deploying new capital. But at the same time, you do not necessarily need to hedge all that much because you're more neutral, conservative, or bearish. So there is maybe less of like a bit to the downside. And on the other side, you do not necessarily want to miss a potential rally should, something unexpected happen, should the Fed be more dovish, surprisingly, or let's say the Russia-Ukraine conflict, were to come to an end. Wishful thinking, I guess.
We were hearing this morning from Jim Rogers, who's been bearish for quite some time, tell us he's not as bearish for the first time in a while because he thinks there's going to be some resolution in that. So who knows? Laurent, here's what's interesting. I mean, for me, it's always kind of a mystery trying to dissect all the different options analyses. There's volumes, there's open interest, there's prices, there's premium, there's all these different things people want to look at. We were just talking about the prices being paid for calls versus puts, which is a little bit more expensive in the calls right now, as you pointed out to us. There's also another chart going around that just looks at the SIBO put call index right now that says it's like hugely in favor of puts. We're like at the highest since like, I don't know, 2009 or earlier in pre-COVID crisis. Have you seen that? Do you have thoughts on that? How does that factor in?
Yeah. So I have seen this chart. To be perfectly honest with you, I'm not a big fan of this chart.
Okay,
if
tell me
you
why.
look at it, I don't know that if you have it or not. So first of all, this put call ratio is very volatile, and then the amount of puts being traded are not necessarily puts being bought for hedging or for protection purposes. In fact, these tend to be more delta one puts that are deep in the money, so have very little convexity to them, and they're bought at spreads, generally speaking, and these are more for arbitrage reasons. I think that I might not have the time to get into this with you today, but these puts are not bought for protection. They're not bought for their convexity. They're mostly bought for arbitrage reasons. They have no real effect on the markets. They're just not an anomaly, but like a very niche strategy of the options market that tend to distort this put call ratio. So I would not read too much into this, to be perfectly honest with you.
Okay, well, that's very useful to know. So the type of risk reversal that you mentioned, that's the way to exploit volatility right now, it seems like, from a trading perspective in your mind. What about just the level of VIX? I mean, it seems like we're still prone to some big moves here. We have gotten many days where stocks and VIX are in the same direction. We've had a few down days where VIX was down anyway. We finally had a decent pop here. It's like VIX doesn't break 20 anymore, but it also is kind of sticking here at low 20s. How does that happen when we have days like yesterday where we're down 4% at one point in the NASDAQ?
Yeah, very good point. Well, we'd have to keep in mind that, we're in December and, VIX is just looking forward 30 days. And there is like this little bit of, let's say, trend in December to keep VIX and volatility measures down because there are like so many holidays between now and like the next 30 days. So, there are not that many trading days taken into account in the VIX. And that also just tends to just keep the VIX compressed. We would be looking at like VIX to correct back up, towards like mid-January or beginning of January, at least after MLK Day and a little bit after, this Christmas season and New Year's Eve. So these are, just market anomalies from that standpoint. Now, we have, hedging with the VIX, just like purchasing, calls on VIX has been relatively difficult this year and has not necessarily been very rewarding. We do not necessarily expect them to, the strategy to be that rewarding next year either, but rather, we would just direct investor towards direct index hedging through SPX options, S&P, SPY, and QQQ options, particularly because this year, they started these daily options that are trading every single day and that allow investors to pinpoint specific macro risks. We've seen a lot of activity in these daily options on big macro days, on FOMC meetings, on CPIs, and so on and so forth. And on these days, these options tend to be a lot more rewarding than, say, VIX calls for example.
Got it. Okay. Laurent, very helpful stuff. Really appreciate the analysis, and let's definitely keep in touch next year.
Yeah, terrific. Happy holidays to you.
Likewise. Very helpful here. Laurent Laskowski, Director of Derivative Strategies at Mizuho Americas, pointing out some of the calendar dynamics for VIX right now, as well as some interesting pushback on the put call utility and some helpful analysis here on the risk reversals. Appreciate it, Laurent. Coming up, the chart master taking a look at winners and losers of this year. So that means with 3 stocks, we got to go 2 losers, unfortunately. But we will take a look at some of the technicals that might surprise you, even in stocks that are trending lower. Rick Ducat, Renita Young, join me next.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on tdameritradenetwork.com to all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
It's that time of year. We're doing a little retrospective. I got Renita Young and Rick Ducat to take us through a few losers and one winner. It's a down market, so our bias has to be here to the downside. Let's start with AMD, Renita, especially this week. I think it's a relevant chart to look at because everything in chips got blasted after the Micron report. Yesterday was really tough for these stocks.
It was tough. So AMD already down more than 50% year to date. And you're absolutely right. This week, chips got hit by Micron's earnings that were worse than expected, really across the board. That dragged down all of its peers. And so we see that it's a demand problem. Now, earlier in the pandemic, it was, of course, the chip shortage, where a lot of companies, they couldn't get enough chips, right?
Yeah.
But now we see a chip glut, and it's less demand for the chips and the electronics that they go into, particularly phones and other things as well. And so some companies like Micron, they announced job cuts, they announced that they're cutting expenses, and many are forecasting a downturn for the chip space, but they're expecting it to rebound in the longer term and improving inventories to lead to higher revenue, possibly closer to the end of next year.
We heard something similar yesterday from Matt Bryson, analyst who joined us to talk about the chips. He remained pretty optimistic that there's a turnaround story, but it's like a year from now.
Mm-hmm.
It kind of seems like that's what everybody's saying.
It is.
We might have to wait till next year.
We might have to wait, and right, who knows what can go wrong within that year as well, because we've seen the surprises before.
Okay, so today's a little bit better. Micron kind of repairing itself. AMD actually is up. Mr. Rick Ducat, Let's talk some AMD here. This chart keeps fading right in line with the trend lower, right?
Yeah, it's been a rough year for everything in this sector, as you said here. And AMD in particular is not looking too hot right now here. We're in a more of a triangular price pattern in the short term. We've had this long downward sloping trend line for much of the year. But since we hit those yearly lows in October, we have been trending upward slightly here. Now, it's not exactly strong. Like I said, we are trading near the bottom of this triangular pattern here. And we're also still pretty close to those yearly lows. We're within striking distance of them. The broader picture as well does not look amazing. The three major moving averages that we follow, our yellow 21-day exponential moving average, our orange 63-day, our purple 252-day, those are all trending downward and prices below all three of them here. So probably as traders would be more concerned about the downside in a name like this right now, especially given that the RSI is trending downward as well. Our measure of momentum is below the midline, the 50 line there, which means that the momentum is more bearish. So we do have this downward sloping trend line in the RSI as well. If we do get some kind of upward movement above those moving averages, look for a break in the RSI as well to the upside here, Oliver.
Boy, that looks like a beauty of a trade waiting to happen. If you trade in the direction of the trend, then you've got a pretty nice potential setup coming, because it is a really reliable downtrend this thing has been in. Obviously, it would be shocking if it didn't resolve lower, but the probability tells us, especially with the RSI declining, it's likely to resolve lower.
Well, you know, stranger things have happened, but the cards look kind of stacked against this company right now and against the bulls. You know, if we do move to the upside, though, take a look at our two shorter-term moving averages, our 21-day in yellow, our 63-day in orange. Those are coming in right around between 68 and 70, as well as with our trend line. So that's a few things that we have to overcome for any kind of continued upside action. To the downside, you know, 55, around that point is the point to watch since the yearly lows.
Okay. Well, we do certainly have plenty of tech names testing those lows. AMD not quite there yet, trying to hold on here for dear life. Really good chart like that. So AMD moved this week off of Micron earnings, but Carnival, our other down mover here we're going to look at, had its own earnings. And a little bit of volatility here, Renita, but nothing terribly new. For the most part, pressure on the stock.
Definitely pressure. So we did see a couple things in Carnival's earnings. We saw that people definitely went back on cruises because of the reopening trade, right? But the outlook does not look good. Particularly yesterday, we saw a note out from Fitch Ratings saying that these cruise line operators are not likely to be able to get their balance sheets repaired. And that's because of this long held debt, or not too long, but it piled on a lot of debt during the pandemic for a lot of these cruise lines so that they can continue to operate, you know. And so Fitch says that many of these operators, they have limited EBITDA and then they have negative free cash flow, and that limits their voluntary debt repayment ability. So they can't put more money toward their debt repayments. So what do? More than likely, they take on more debt to be able to do this and to be able to fund more projects that could bring more income. But where does the cycle stop?
Right. Are they going to have to issue stock eventually, too, which will kill the shares?
It could. And so that's a thing that we look at this time within a company's history, if they find other ways to be able to beat down their debt.
Yeah. Basically, they're waiting for people to just get back into cruise mode. And they're making some progress towards that. We haven't totally closed the gap of 2019 yet, but we're making progress.
Right. Some progress, but who can tell what will happen, because we still have these macroeconomic pressures. We still have a downturn coming, and we still have people being a little bit more conservative with their spending. So are they going to splurge? Right. Are they going to splurge on the cruise line, or are they going to take a car trip somewhere?
It's not the best time to be banking on a super extravagant consumer, I don't think. We're definitely spending on the airlines. But with the cruise levels, because the airlines are telling us they're basically closed the gap with 2019, but the cruises haven't quite done it just yet. They're looking for it this year, and that relies on a consumer staying strong when we got everybody, you know, worried about recession right now. Technically, Rick, how are we looking? I mean, New lows on the way for Carnival. Seems like it's found some support the last several months.
Yeah, this is a stock, another one that's in rather dire straits here, no pun intended. We're down about 62% on the year. And this one looks quite a bit more range bound to me, though, because the thing that really stood out to me about this chart is the $11 level. You can see that red dashed line. That was the start of our gap down that we had before the earnings in June. And since then, we've tested it about 6 times to the up, and failed to break above it. So the more times a resistance level is tested, the more significant it becomes. And this one is quite a big line in the sand there for anyone thinking about being bullish in this name. Now, if it does break through, the reaction could be quite energetic in terms of a breakout to the upside. But really, we've got quite a ways to go before we get to that point. So looking at the RSI, we can see that the RSI is matching up pretty cleanly with this downward trend line that we're seeing since we last peaked above that $11 line. The stock price has been trending down. RSI has been trending down pretty much in tandem. So another thing to consider is that, one of 2 things would be what you'd be looking for with this. One would be another test of the trend line on both price and RSI and subsequent rejection. Or the other thing would be some kind of breakout above them. And that way you'd be looking for a breakout in the RSI as well to lend some greater credence to that move upward there. But we've got some pretty stiff resistance to overcome. We've got our yellow 21-day, our orange 63-day, and those are both between the 8 and 9 level, roughly. To the downside, the $6 level looks important to me, obviously, because that's the yearly lows. Not too much other support other than that.
Yeah, it's kind of interesting compared to the AMD chart, where AMD has this really obvious trend of lower highs, lower lows. Carnival has that kind of pin at $11, which, to your point, obviously acts as resistance, but it also kind of provided a little bit of kind of just magnetism, where like 6 months, we were basically trading around that level. So it wasn't really obviously trending lower until the earnings blow up from October. So the fact that maybe we're not making new lows this week after their earnings, I mean, we're close, but the last time they reported, they dropped hard from $11. So the fact that we're not making new lows, maybe there's some hope here in Carnival, but man, it looks, to your point, otherwise just like a really ugly kind of inevitability of a breakdown here, the way RSI is slowing, the way the chart is going. But some hope, hope springs eternal, I guess. All right, let's talk something positive here before we close it out. ExxonMobil and the energy companies still staying strong near the highs. And now that big gap with crude oil down at the lows, kind of resolving with crude coming up a little bit here. So what are the analysts saying? What are the vibes like right now, Renita, and the big oil companies?
Well, first off, big oil has had a big year. ExxonMobil in particular up around 75% year to date. That's huge. It's on pace for its best year ever. Also, its valuation surpassed Tesla's for the first time since 2020 a couple of days ago, while Tesla's stock has plummeted more than 60% this year. That's its worst slump ever. But it's all on the back of the resilience we've seen in the oil and energy sectors. If we remember back in March, crude oil peaked above $120 a barrel. That gave this stock a huge boost. And so it's all the story as well of the growing geopolitical issues, the macroeconomic pressures that are sending investors to businesses with strong cash flow. Mm-hmm. And those are the value stocks, not necessarily the growth stocks. And
Bingo.
So today, crude oil, it's back near $80 a barrel, closer to those lows that you talked about. Hasn't risen much this year, but in energy, we've seen nearly a 5% increase or so on that sector on a whole. And it is up as well today.
Great day today. Crude oil up, energy stocks up big, as we just saw. And as the market's trying to bounce back too, a little bit of a, kind of catch, because it's the sector that suggests inflationary forces might still be at work. Rick, technically, any sign of a breakdown in Exxon?
I don't know if I would say a breakdown, but I would say that the trend is slowing a little bit. Now, this is not exactly some crazy, unexpected thing that's happening, given that we're up 78% on the year. So taking a breather is not really, something that makes me worry too much for the bulls in this theme. Now, that being said, we did have a downtrend, a short-term downtrend going off near the 114 level that was broken recently. We didn't get quite a big breakout yet. But
I'll be checking back in a little later too, you guys. I'm just gonna let my stuff cook.
The first range, the upper range, was near the highs at 114 for the upper part, and the 108 level is where it bottomed out multiple times. Now that same 108 level, that blue dashed line, that's the upper part of our second range, and the second range, the lows come in at 103. So between 103 and 108, and 108 and 114, we have two separate ranges, sort of like that. So we're testing the upside of moving into the lower range to the upper range here. We're breaking above our yellow 21-day exponential moving average. We found some support at our orange 63-day moving average yesterday, and retesting that trend line. So really, it's looking like momentum to bullish momentum. Now we're moving into more bullish momentum here. So those are some interesting factors that are taking place today. Some support at the confluence of our orange 63-day EMA and our trend line, which is right about near the 105 level. And some resistance would be, some resistance would be at our 114 level if we are able to break above the 108 level.
All right. I got to say, the best chart, obviously, with the uptrend, actually kind of looks the best, too, when it comes to some of the second order analysis, where, yes, we've had a pullback, but the RSI hasn't broken down that bad. It seems like the RSI has bottomed out, and it's already kind of sticking to your midterm moving average line there. So it seems like Exxon's in pretty good shape. Like much else in the energy space. Thanks, Rick Ducat, for the charts. Thanks, Renita Young, for the analysis. Appreciate it, guys. Okay, coming up, we'll get a stock update. We'll get our panel in here and talk about the turnaround. Nice bounce this morning. We're positive, not by much, but it sure beats being down more than 1%. Bulls are looking for Apple to turn positive, but it hasn't done that just yet. Caroline's going to give us an update on FedEx and UPS after earnings and into the holiday season. Shares are a bit higher this morning.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the Income Investing course and a whole lot more.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on TDAmeritradeNetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience with innovation that lets you customize
Christmas Eve could be delayed across the U.S., specifically noting substantial disruptions at its Memphis and Indianapolis hubs due to severe weather. Meanwhile, UPS is blaming that severe weather across several regions of the U.S. for disrupting its UPS air and ground network, including UPS hubs in Louisville, Kentucky, and Rockford, Illinois. It says as a result, some delivery and pickup services in these areas will be affected. It's interesting, though, Oliver, because I'm still actually getting emails from retailers saying it's not too late to order for Christmas. I just got one from Backcountry this morning offering free next day shipping in select cities. So we know it's a very promotional time. We'll see how these retailers actually do with those last minute sales.
NASDAQ down 0.33% at 10,921, and the Russell is down fractionally at 1753. We've gotten in some economic data, but showed really the takeaway was that people are spending less. Take a look here at Bitcoin, 16,800. That's up 65. The dollar, 104.01. Gold, 18.08 a troy ounce, and oil, 79.73 the barrel, up almost 3% today. For a look at some of the top moving stocks in today's market, I'm joined by Jenny Horn, markets correspondent here on the TD Ameritrade Network. First story here is Tesla. Dan Ives cutting his price target there, and Elon Musk saying he's not selling anymore, at least for a while.
Right, and Dan Ives, who's notoriously a bull on Tesla, changing his tone a little bit today, which is interesting. So we heard from him that he did trim his price target to 175 from 250, but that's still about $53 above where Tesla shares are currently trading, given the fact that it's down over 17% this week. Ives said based on the firm's work, he thinks Tesla will miss its reduced street estimates for the fourth quarter with a softer trajectory for the new year. He also thinks fourth quarter delivery units are now likely in the 410 to 415,000 range, which is down from its prior forecast, as well as the street's consensus, which stands around 435,000. Now, Ives believes Tesla is facing some serious macro and company-specific EV competitive headwinds into 2023 that are starting to emerge both in the U.S. as well as China. So he actually sees all of these headwinds relating to Tesla outside of Twitter, which I find really refreshing, Nicole. I think the headlines can often get confused, but if we have Tesla-specific problems, I think that's so much more important to Tesla shareholders, of course.
Yeah, but it's terrible. I mean, it's a terrible piece of news. If you're telling me that there are problems not only abroad, but also at home, and people have lost 60% of their money, I mean, I guess it's good news that we can get away from the Twitter headlines, but Tesla's been such a disappointment. Let's see what happens in the new year on that one. How about Meta Platforms? Also not great news for this year, but tell us the very latest news, Jenny.
Right, and not great news for Meta Platforms either, Nicole, as they did settle a class action lawsuit that stemmed from their Cambridge Analytica case for a whopping $725 million. Now, it is the largest recovery ever achieved in a data privacy class action and the most Facebook has ever paid to resolve a private class action suit, per a statement from the plaintiffs of the case. The class action lawsuit actually began back in 2018 after Facebook disclosed that the information of 87 million users were improperly shared with Cambridge Analytica. Now, since Cambridge Analytica has been shut down following these allegations, but this is, of course, the latest in their legal troubles. This is the company that back in 2019 actually settled with the FTC to pay around $5 billion and closely after also settled with the SEC paying up to $100 million. And this prompted then the, of course, name change of Facebook to Meta to step away from being thought of as just a social media company and now thought of more as the metaverse, which has also been somewhat of a failing concept. Meta Platforms down 66% this year, relatively quiet today, only down about 0.4%, down about 2% this week, but still obviously not good news for the company, but perhaps some closure here as this has been an ongoing case since 2018.
All right. Jenny Horn, thank you so much. I wish you a Merry Christmas and Happy Holidays. Love working together and being on the show together all the time. Jenny Horn, markets correspondent. Thank you. Let's get some insights in the news shaping the markets. And for that, we welcome in Paul Kim, CEO and co-founder of Simplify. Paul Kim, how are you feeling? Look, we're wrapping up a very difficult year. We're heading into a new year. What's your wrap-up thesis here and into new year?
I think inflation is top of mind again, right? And it's not so much that it's scary where we don't know where it's going to peak. I think it's scary in that it's persisting. And it's not just a U.S. phenomenon, it's global. Japan, Europe, multiple economies in Europe, and you're seeing it all over the place. So this is here to stay. And this is despite energy having fallen off and commodities having cooled recently. So all the factors that have driven inflation seems fairly persistent. And if we're sort of in the 4, 5, 6% inflation for a while, I think the related view is that rates are probably going to be fairly sticky as well, which is what the Fed's been saying all along. they've been communicating that rates will stay higher for longer. But I think that creates some opportunities. So we're starting to look in different parts of the market.
Well, you talk about opportunities, but at the same time, you said we may not have even started the bear market yet. So I'm getting a little confused. Where do you stand?
So agree, bear market on the equity side. I think it's almost a mechanical repricing recently, right? In the past year, rates have come up a lot. And so I think risk assets generally have fallen, bonds have fallen a lot, but that creates opportunity now. The rising rates have created a really attractive asset class in particularly short duration treasuries, right? We're talking sort of like the 2-year bond, for example, is a massively interesting opportunity where you're getting paid over 4% yield. You have very little duration risk. And if the Fed starts easing at any point in the future, you have the tailwind of price appreciation behind you as well. So we think that's a pretty attractive place to hide out while we await sort of the bear market to really get going. And why do we think the bear market hasn't started yet? We really haven't seen anything in the credit cycle. We haven't seen any real impact from all the hiking yet. It's sort of earnings have stayed relatively, they're coming down a little bit, but they're still relatively high, and estimates are still relatively high respective to previous recessions. So I think we have a long way down, but it's going to be a sort of a extended, choppy ride down like we've seen all year. And if you want to stay away from that, fixed income is a great spot. Treasuries look really good.
So here's the thing.
That happens next year.
Do you think the Fed's attacking things in the right way? Is inflation truly the problem, or is Fed going too aggressively and not hitting things in the right way?
I think they were late to start and then way too fast once they got going. And right now they're probably, they've caught up. They caught up very quickly, and that pace is going to break stuff, and we haven't seen it yet. We may see it in the private credit, private real estate markets in the near future. We've seen it early in tech, again, very sensitive to interest rates. But I think we haven't seen the real
What are you ladies doing? Anybody making money? I think I'm into swing
by TD
trades.
Ameritrade is more than a trading
I'm
platform.
pretty sure I
It's an
am.
entire trading experience that pushes you to be even better. And just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade,
Okay, I'm gonna
there's
peek
no
over
going
here
back.
forward.
Oh, yeah.
Just for kicks.
You downloaded the TD Ameritrade mobile app? Actually, I'm taking one last look at my dashboard before we board. And you have Thinkorswim mobile?
Oh,
So I can
same
finish analyzing
thing.
the risk on this position.
You two are
Shop.
all set. Choose the app that fits your investing style.
I'm Nicole Petalides, live on the floor of the
Up
New
and
York
down.
Stock Exchange, empowering investors every single market day. Tune in to the TD Ameritrade Network. Welcome back to Trading 360. I'm Nicole
Look at
Petalides, live at the New York Stock Exchange. I was just looking to see what's doing well. Energy, utilities are leading the way. Most of the sectors are higher today, but it's going to be likely another losing week for stocks. In fact, the third losing week in a row. You are seeing the Dow 28 points at 33,056, the S&P 3825 gaining 3 points, the NASDAQ 0.33% lower. We'll be talking about some of those tech stocks later in the show at 10,926, and the small caps down fractionally. This says sentiment improved a little bit. New home sales were up, but personal spending, we watched durable goods and PCE, and personal spending has been lowered. People are not spending as much. They're spooked. Now for developing stories this morning, I'd like to bring in Renita Young, Senior Markets
Maybe we're
Correspondent for
heading
TD
into some
Ameritrade Network, taking a
consolidation
look at
with the
CarMax.
RSI right
A
around
lot of price
50.
target adjustments
All
today.
three
Tell
of the
us all about it.
SMAs.
Well, first off, let's acknowledge the fact
Here we
that
go.
CarMax shares are up
It's
more
about
than
11.
3%
Yep,
today.
11:30.
That is pretty interesting considering
We'll
the
see.
fact that it got quite a few price target cuts after those worse than expected earnings. Bank of America cut its price target on the stock from $100 to $49, kept an underperform rating, pardon me. This analyst says that it was all based on that material miss in the third quarter and tough market dynamics. And so he's also lowering the price target for full year for the next 4 full years. Baird also lowered the firm's price target on CarMax from $82 to $65, but keeping an outperform rating. Maybe there's the hope there. This analyst says, although he got CarMax wrong in 2022, he believes it's too late to downgrade it and expects affordability to improve in 2023. We know that a large part of that might be due to interest rates, right? Or car prices. We'll find out where they go. But other analysts also weighed in. You just saw Evercore Morningstar also lowering price targets for this stock. And earnings were definitely below expectations of 65 cents a share, coming in at 24 cents a share, with revenue falling 23.7% to $6.51 billion.
I can't believe the Morningstar call. $140-something. I mean, that's not even in the 52-week range.
It's not.
The high was 131.
It was.
So, I mean, with their buy rating, they are truly optimistic. Okay. Look, maybe
Last night, my neighbor was playing the best
Thank you.
Christmas music, I
Time to spotlight
promise.
fixed income.
He
heading
played
into
all the classics.
2023. Joining me right now, Andrew Leckis.
I'm surprised he's not
Partner,
playing it
head of fixed
today.
income and currency and commodities at Old
Let me
Mission.
watch
Andrew, thanks for being
QQQ
here.
and mind the
So
business that pays
it
me.
was the worst year in bonds since the 70s. I mean, it just, I wanted to say ever, but it's not ever, but I do think it's in a long time. Tell me, and obviously we've been in a cutting environment,
good. Oh my goodness.
lowering rates for the last 4 decades. Things are changing.
Thanks for having me, Nicole. And things definitely are changing. I think worst year for bonds, maybe it's late 70s, early 80s, something like that. And it's not only bonds that struggled this year, but it's the 60-40 portfolio. A lot of these traditional portfolio constructions are kind of meant to have equities as a piece and fixed income as a piece, and have those two pieces sort of be uncorrelated, inversely correlated, less correlated, something along those lines. And you really didn't get that lack of correlation this year. So I think a lot of people who are looking at the fixed income portion of their portfolio as the safer portion of the portfolio, as their insurance of the portfolio, with a lot of bond returns kind of in the same -20 to -40% range that equity returns were this year, we're really not getting that protection, not getting what we paid for there. So I think that's woken up a lot of the investors who are looking for those things to be more correlated or less correlated, excuse me.
I think our, viewers are really smart. I think the young people are really smart, but I think that they definitely got caught up in the meme trades, right? That was exciting. When you started seeing GameStop on the cover of the newspapers and, people who never really cared much about the markets started to care because they felt like they missed out, even in crypto. But now things have come down. Everything has come down. Meme stocks didn't do well. Crypto didn't do well. So now maybe investors, young investors, should look, and you think it could be attractive fixed income for them at this point, right?
Absolutely. I think it could be extremely attractive here. And the reason being, like you said, we had the meme stocks, we had the crypto, maybe some of the tech stocks that got a little overextended. And bonds for the younger investor, I think, have been off the radar for, say, the last 5 years, right? It's the combination of really low yields, 1%, 2% is not getting many people's attention. And then you kind of mix that in with a lot of the meme stocks or the high flying tech stuff that was up 10, 20, 30, 40, 50, you name it. And it was easy for bonds to kind of get dismissed, to kind of get left behind. And now I see the younger generation probably could take advantage of engaging with bonds in a few different ways. Like, I might have not thought a year or 2 or 5 ago that I would want some fixed income in my portfolio. But one way that I think any investor, and not just younger, could engage with fixed income is on the very, very front end, whether this be T-bills, money market funds. What you're getting in the bank savings account or checking account is negligible. And I have T-bills at the front end this morning at 4%. Some of the money market funds that take a little bit of risk in investment grade credit might be 4 or 5%. So certainly sweeping that money out of your savings and checking account, if you're a younger or an older investor, and putting it into maybe T-bills or maybe something money market seems to make sense for sure. So that's definitely one angle that I like. And the other angle I like, maybe is a little less popular, or a little less of an easy thing to convince investors of, but it's extending duration here. If you look at 20-year yields, they, even though the curve is backwardated a bit right now, they profile very similarly to these front end yields, and sort of locking in, 6 to 7% on some longer end IG that might be, that might get the 35-year-old investor kind of locking in a 6 or 7% yield all the way to and possibly through retirement might be an attractive way that younger people could play bonds, and hopefully in coming years you might see those traditional correlations return, which would also have your bond portion of your portfolio lowering the variance overall more than it did this year.
Is that when you get to the 60-40 portfolio? Is that what you're talking about?
That's definitely part of it, right? And maybe for a younger investor, it's a 70-30 or it's an 80-20. But I think for a long time, to your point, with the tech stocks, with the crypto, with the meme stocks, it looked a lot like 100-0. The stocks only go up sort of mantra. And, so maybe it's not a 60-40. It could be a 70-30, an 80-20, a 90-10. But I think a lot of younger investors had 100-0. And I think that we're going to see that start to change as yields, get more people's attention.
Right. And so what's the takeaway for 2023 and beyond? Because a lot of people are doing short-term investing, right? They're really not looking to longer term to make money at this point, right? They're looking at short-term bills at this point and making money versus trying to do things for the longer term. How would you break that up for a short-term and long-term bond portfolio?
So yeah, definitely for the short term. And you're right. I think the average investor might have a 6 to 18 month sort of time horizon. So what would the plays be on that time horizon? I personally like front end investment grade, right? Very, very low risk. Index funds up there are probably yielding something on the order of 5.5%. And that's a place where you can hide out. And as maybe you take a larger weight in that portion of your portfolio than you normally would. And then as you find, valuations in the stock market or in other places get more attractive, that's a place that you can use a little bit as a piggy bank, holding the cash, getting a nice interest rate on it, getting a nice return on it, and then when you do find that next investment opportunity, those highly liquid securities that are yielding well on the front end, they'll be easy to sell, and then you'll be able to pick the next thing that might have a more attractive risk reward profile.
Yeah, and I know you really focus on fixed income, currency, and commodities. And I would just love, with the dollar at almost 104 today, people are also watching the commodities closely. And are there ways in equities even to play the commodities that you like? I mean, do you have an equity play here?
So the equity play, if we're talking currency, the dollar has been a very difficult headwind for, a lot of assets this year. Emerging market stocks being one of them. Commodity stocks have generally, weathered the storm pretty well. Oil prices, grain prices, after an initial spike have certainly came in. If I had to go with an equity play here, though, some of these mid-cap US-based energy stocks seem to be an attractive play. Their free cash flow relative to their debt service, these businesses that have kind of lower but not the most attractive break-evens on oil price, mid-continent, E&P, logistics in the energy space seems like an equity play. And, sticking with the fixed income theme, because I am a fixed income guy, a lot of these stocks have attractive dividends. And as this free cash flows increase, they're looking to buy back shares as one thing for sure, but also maybe juice those dividends a little bit, like we see some of their larger capitalized peers doing.
Thank you so much. It's great to have you on the show, Andrew. Thanks for being with us, Andrew Lex.
Thanks for having me.
Thank you. Coming up next, disruptors. George Still is taking a look at First Solar, an initiation over at Daiwa, and George will have all the details on this one. Trading down about 1% right now, and a way to trade it as well.
Watchlist can help you keep track of securities you're interested in. To add a watchlist to the left sidebar, select the plus sign, then Watchlist. When the default list appears, select the name box, then Create Watchlist. Enter a watchlist name. To begin adding securities, enter a ticker symbol in the symbol box, then select Enter. Continue adding all the symbols you want in your watchlist, then select Save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then Add to Watch List. From the Scan tab, right-click a security and then Add to Watch List. And that's how you make a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy. A measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
Welcome back to Trading 360. It's time for the disruptors. George Sillis is with us, senior markets correspondent, TD Ameritrade Network, to take a look at First Solar, an initiation over at Daiwa. Interested to hear what Daiwa had to say, especially since we talked about solar installations down about 17% this year. But curious to hear what they have to say.
You don't feel, even though you're so low.
Well, interesting you bring that up, Nicole. I mean, installations are down, but a couple of these stocks that we've talked about First Solar. It's been about a few months since we've hit it on this show, but we talked about Enphase, and these are U.S.-based companies that I think are getting a lot of interest from analysts, but also a lot of tax credits from the Inflation Reduction Act. You can actually see that companies like First Solar and Enphase have really outperformed other Canadian solar producers, which are unfortunately not participating in these federal tax credits. And this is what Daiwa is seeing, but also if you look at Goldman Sachs, they actually pointed this out directly. They actually see higher U.S. manufacturing tax credits as one of the reasons that they recently moved their price target on First Solar from $179 to $231, as this company since July has more than doubled. It was trading around $62 back in July. Once this bill was passed in Congress, the stock really took off. And I think there's a lot of demand still, despite some of the challenges in the last year in terms of installations for residential, commercial, but also modules and, of course, inverters that are utilized in the utility electricity industry as well. So overall, the trend is still to the upside. And I think if you also consider, earnings estimates, the many analysts out there are reluctant to perhaps cut estimates, and even companies, Nicole, are reluctant to cut 2023 earnings estimates. When I looked at First Solar, they actually lost about $1.65 in the last 4 quarters. And the last time we covered the company, the estimates were for $2.17 a share. And that's for 2023. I went and looked now, they've actually upped their estimates to $3.65. So they continue to move the needle in terms of their expectations for net income going forward. The stock continues to trend higher, and the analysts also see what's really going on, which is essentially these remarkable tax credits that are, again, helping the domestic manufacturers like First Solar.
Yeah, and that's a big deal when you start to see the estimates going higher and also joining the S&P 500, which gives stocks a boost overall.
Have you guys been to East
Your thoughts on how to go about trading this?
So beautiful. The water is so beautiful.
Yeah, so looking at it using a weekly chart, it actually broke out of the $145 area. This was back in October. Seems to be retesting that area, so I think it's potentially an area that could hold. In terms of the price action as we move into the end of the year and perhaps in the beginning of next year. So in this case, in most cases this year, Nicole, we may have taken maybe more than just a handful of really aggressive bullish trades, but all our trades have been relatively modestly bullish or neutral, or again, those that are surrounding credit spreads. So we'll continue to do that because it's a strategy that's worked this year. And looking at that price chart of 145, we could actually sell the January 145, 140 put spread for about $1.50 a share in credit, or $150 a contract. So the whole premise behind this trade is to have the stock trade above 145 or stay above 145 between now and expiration of 28 days. But you have to consider the risks. You earn $1.50, but there are $3.50 of risk you have to consider. But ideally speaking, probability also favors the seller here, because this short strike of 145 has a probability of profits that is up to 70%, meaning that it has a 70% chance it'll stay above 145 between now and expiration.
You hear how they're calling out the plays?
All right, thank you for that. Always a great job here on 360 every single day, George Sillis. Great to see you. Probably won't see you till 2023. George Sillis, thank you. Our 360 round up next, looking at tech. Will it be choppy? What about those?
Is that better?
See a turnaround. What names should be on your radar?
Thank you, Marilyn. Is that better?
Let's walk through how to analyze a company's financials on Thinkorswim.
Listen, that's because the fan is on.
Go to the Analyze tab and
pool.
select Fundamentals.
Okay.
Enter a symbol, then select Enter. To download,
That's because I got the computer further away from me too.
By the numbers provides balance sheet information and other fundamental data.
So
Company details
we're
provide
just
summary
looking
takeaways on key metrics
at the
and what
candlesticks
drives the
come in.
stock. Take
But
a
you
look
all,
at
I
the
think
article
most of
and
you
some other
know
information.
what we're looking
If you
at so
find any
far.
of the
And I
information
think this is a,
particularly helpful,
you know,
you can print
maybe
it
it's going
out
to be that
or
little
take a
hop up
screenshot.
thing
For more
that it
demos on
does
how to
on
Thinkorswim,
top of
head to
those
the Education
SMAs.
Center on
Maybe it looks like the
tdameritrade.com.
beginning of that, which wouldn't be bad because that's usually a path or pattern I've seen QQQ take up. So that might be, that's doable. That's positive, unless we get some down. But either way, I think I'm swinging my contracts for, because I have an
We
expiration date, I
empower
think,
those
till
who act.
January. So we'll see.
Those who see the correlation between upswings and downswings. Those who manage risk
Excuse
by
me,
meeting
I'm
each
sleepy.
obstacle with a perfectly executed strategy.
Y'all don't
A
know.
measured
I used to
approach,
take a nap every
the
day,
right
and I
tools,
still do.
driving
Take a nap
accuracy.
just about every day. It's just one of
where
those,
risk
you know,
meets
it's one of those
opportunity.
things that people
When
should
traders tell
do.
us how to make Thinkorswim
And we
even
laugh,
better,
but
we
people
listen.
should take naps because your
Like
body
Jack.
and your
He
brain,
wanted a
it
streamlined
needs to
version he could
rest.
access anywhere, no download necessary. And Kim, she wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web.
Can you hear? Is it
Platforms this innovative
balanced?
aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Okay, let's see where we are.
Welcome back to Trading 360. It's time for our 360 round all about tech. I mean, obviously, tech has had an incredibly rough year with the NASDAQ down more than 30%, but many of the names down 50, 60, 70%. We bring in our pro panel. Daniel Rubino, editor-in-chief of Windows Central, and Daniel Newman, principal analyst at
And then
Research.
I probably need to speak up
It's
too.
been a tough time.
I probably need to go back in the house because it looks like it's about to rain.
What are you thinking about 2023?
I definitely don't want to be out here. Usually midday, there's a rain anytime from noon to 4 o'clock. So let me check.
We'll see some innovation in laptops,
Because it definitely
dual
looks like
screen
rain.
laptops, which will test the water for that form factor. We'll also see some new innovation from some other companies as well in that space, which will be really interesting. But I don't know if it's going to catch on, at least this time, just because of the way the economic conditions are. You know, when it comes to new chips, AMD, Intel, of course, will be announcing new things in just a couple weeks at CES 2023. I don't expect these to be revolutionary chips. They'll be iterations of current designs. They'll be nice, but I don't think they're going to shake up anything in the market. I think the thing to watch will be Qualcomm. Late in 2023, we are expecting them to finally unveil their new chipset called Orion, which is based on Nuvia, which was a company they bought made up of ex-Apple engineers. And that's going to be one of the first ARM processors to really challenge Apple, at least in theory. That's what Qualcomm is saying. Now, those chips won't ship until sometime in 2024, so we're still a little bit off from that, but at least we'll see what Qualcomm has cooking. And apparently, according to them, they are winning a lot of designs via their partners. That is, other PC companies are really excited about
I'm just
these
checking
chips
over
and are
here,
committing
time and
to
sales
them
to see
more so than
like
ever. So I think
how
that's gonna be a
high,
real
how
big story
low,
to watch.
what's
Other than that,
coming.
you know, when it comes to gaming,
Not that it does
you're going to have a
anything.
lot going on in the handheld space, mostly due
Makes me
to
feel
cloud
proactive.
gaming. So you have Razer and Logitech playing in that space. And I think that's going to be kind of really interesting to watch.
A lot to look forward to.
When I
Daniel
tell y'all
Newman, you
I'm
said you're
sleepy,
really
I'm
looking
sleepy.
at a lot of old school tech. You had
I didn't
your
sleep good last
2023
night.
picks, which I'd love to hear about. Why you're thinking that might be the way to go.
I didn't sleep
Yeah,
well.
a slightly different part of the technology sector that I'm going to focus on than what Daniel did, and that's the enterprise. When the macro gets tough like this, consumer balance sheets get worse, refreshes on new mobile devices, phones, games, that slows down a little bit. But I think one of the things that happened during the pandemic was we pushed a lot of digital transformation forward, but we actually threw a lot of bodies at things rather than actually getting these tech projects completed. So companies are going to be looking back to their existing infrastructure, their spend to solve problems with cybersecurity, data analytics infrastructure. So I kind of like some of the old guard, the IBMs, Oracles, HPEs. And then I like some of the what I call deflationary technologies, companies like ServiceNow that add automation to workflows, companies like Adobe that can digitalize buyer journeys with deep analytics and better understand
Yes,
the
we're
consumer
going
and
to
how
the
we get
beach,
the right
y'all.
offer in front of them, especially with everything that's going on with social media and third-party
Thank you,
data.
ladies.
So I kind of
Yes, can we meet up at the
what's
beach?
old is new again,
Please
because I
pick a
think companies
beach.
are going to be maximizing their old technology
Pick a beach
investments. They're going to
town.
be slowly moving workloads to the cloud. So the cloud's not
And
dying
anywhere
by any
too, you
means,
guys.
but I think we're going to see more
Anywhere.
of
We
that
should just
kind of
pick a
how do we
really
get the
pretty
most out
beach
of what we
town
have, and how do
and
we
meet up.
head
Oh my
count
goodness.
and continue our digital transformations going forward.
I wouldn't even mind a beach town in
ServiceNow,
Europe. I'm
IBM,
just
Oracle,
saying, just
Cisco,
tossing that out
HP,
there.
and Adobe. Daniel Rubino, quick thought on Apple.
Mexico has
Apple,
beautiful beach
their
towns,
big project,
and
the
I've seen some
AR/VR
beautiful
headset, is
ones.
on
And there's some I
indefinite
haven't seen
hiatus. It's
too.
supposed to launch now
Like
in
I
late
haven't been to
2023. We'll see
Bacalar
if that time frame slips.
and maybe
I'm
some of
not
the
sure
smaller
we
ones,
should
but
even be
the other
excited about
ones,
this
oh
thing.
my gosh.
AR/VR has been struggling, I think, in the
Just
market
beautiful.
besides
Beautiful, beautiful,
certain
beautiful.
niche segments. We'll see what they have to deliver, if they can actually deliver to market, and if it doesn't slip. Other than that, iPhone 15 will get a refresh, but the big news there might be them switching to a Type-C port finally, but that's mostly due to pressure from the European market. Other than that, I'm not really expecting too much in the way from Apple.
Yeah, Daniel Newman, you think we might see a rebound in some of those chip names?
I think the enterprise and cloud spend will
I
be
think
strong
it's just
before
going to be
consumer
pretty
will.
quiet.
I think that
Yes,
automotive remains
Puerto
kind of strong.
Vallarta. I
Supply
haven't
chains still
been.
have issues,
Yes,
and some of those
that's a
lagging
good one.
processes, we're not really addressing them at any capacity. And I will
I don't see why
address what the other
not.
Daniel said. I like Qualcomm's prospects with its future ARM chips. I think those are going to be really interesting.
Y'all know
And
where
just
I
for
want to
fun, I
go.
think Microsoft wins
This is
the
not even
the
touristy.
Activision deal
I want to go to
with the
Mazatlan.
FTC.
I've been trying to get there for
Microsoft
forever.
acquisition does go through. Yeah,
That's where I
Daniel
thought
Rubino,
I was
quick
going to
thought
go
on what's going on
initially,
with Twitter. You had a
and
quick thought
I
there.
wound up here in PDC,
Yeah, so it's gonna be fun
which
to
is
watch Twitter,
beautiful.
obviously, for the next couple of weeks.
But I
See
would
if
love
they
to go
can
to
actually get
Mazatlan,
their
you guys.
budget in line, as well as stop hemorrhaging
And
users. I think the big
what's
story
the
is gonna
other
be
one?
interesting to watch is this idea of a
Puerto
decentralized
Escondido. I
metaverse,
heard that was
which has been
beautiful. That
around for
whole
years, but
Pacific
it's finally
coast.
getting kind of
You
pushed
can
to the
start
mainstream.
in
Is
Puerto
it going to be
Vallarta
a
and
flash
just
in the
work your way
pan,
down the Pacific
or will it
coast.
actually catch on and be
Can't go
transformative
wrong.
for the market?
Beautiful
I think
beach
it's going to be really
towns.
interesting.
In
You know,
Oaxaca too.
Mastodon
We
is
need to
making
go
a
to
lot of
Oaxaca
news. A
and
lot of
eat delicious,
professionals, tech
delicious
people,
food.
journalists are switching over to it, but it remains to be seen if it will actually challenge Twitter.
Speaking
My
of
thought is I
delicious,
think Twitter
delicious
will
food,
continue
is it
its downward
lunchtime?
spiral, but you never know in this market what's going to happen.
When you
All
know.
right, great to see you both. Thank you so very much. I mean, obviously, an exciting year ahead, possibly, for some of the tech names, Daniel Rubino and Daniel Newman. Thank you. Thanks, friends, for being with me. That's it for Trading 360. I'm Nicole
Yep,
Petalides, and
I
we'll see
think
you at 2
maybe it's
p.m.
going to be
Eastern Time
consolidating.
for
I
the
don't
watch
know.
list. Keep it right here. Dow's up about
But
90.
it
Fast Market
does.
is next.
I don't know. Let's see if it's going to rain. Is everybody done with all of their holiday preparations and family prep stuff?
TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trading
We're
webcast
trying to
series
be
is
active
designed to
traders,
help
sir.
you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning.
Pretty
at
light
its
volume
finest.
today.
Tune in live or
So
watch on demand.
I think this one's going to be like watching paint dry today.
Webcast.
Unless it takes off one way or the other. And I sure want to be here to see it if it does. Hold tight, y'all. I'm about to go check. See anything happening over here.
I'm Nicole Petalides.
You done,
Live from the
Maryland?
New York Stock Exchange
Good.
every single market day, from the opening to the
Maryland,
closing
I would
bell.
love to
Tune in
see.
to the TD
I got to check your blog out. But now you got me on Pinterest. Now I'm looking at craft
When traders tell us
projects.
how to make Thinkorswim even better,
You got me baking
we listen.
things.
Like Jack. He
Let
wanted
me
a
check this
streamlined
out,
version he
y'all.
could access anywhere.
I got to see because
No
I'm going to have to
download
bail on
necessary.
something.
And Kim, she wanted to execute a preset trade
Looks
strategy
like the
in seconds.
calls might be
So
the
we gave him
winners today.
Thinkorswim
We're going
web.
to see.
Because platforms
We're
this
going to
innovative
see.
aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Trading has changed forever as a new generation of investors make their impact on
Done,
markets.
done,
more
aside
important than
from
ever
putting
to
out my
navigate through the
3
frenzy
foot
of
silver
meme
tree.
stocks, IPOs,
Picture.
and the next wave of tech.
And that's where we come in. discussing strategies and example trades.
L, at least you made the effort. I didn't even make the effort, L. No, I'm so glad to be free of it. Christmas is still my favorite holiday, y'all. It's still my favorite season of the year, you know, just from starting with fall, just all the way through New Year's, really. And then on through, because my birthday's in February, so it's just a beautiful time of year. But I do not feel bad, y'all, about not having to put up that tree. Oh my goodness. And all the ornaments and the cleanup afterwards. Oh my gosh. I did that for years, for eons. Not years. I did that for decades. I'm good. I am so good looking at these people's beautifully decorated balconies and trees. The lobby is beautifully decorated. I love it. I can go visit Santa. I just don't need to do it myself. I'm free. I don't need to do it.
Fast Market. I'm Tom White. We've got a great show
And
lineup for you today.
I don't mind visiting people who've done it. I want somebody else to do it. I want to be the guest now. Oh my goodness.
For the
I want
month,
to just be the
Amazon,
guest.
which hit nearly 3-year lows this week.
Okay,
And like
what
Polly
we
will break
doing?
down consumer sentiment data on Walmart, which continues to outperform the overall market. Now, 2.5 hours into the trading day, stocks are
266.70.
choppy, but off of lows as traders contended with a slew of economic data validating the Federal Reserve's resolve to keep raising interest rates. Equities bounced after a key part of an inflation gauge showed
So that's
price growth
$1.50.
eased less than anticipated. Now let's take a look at the four major indices. As we are off of those session lows,
Lord.
the S&P 500, the benchmark, up 0.3%. The Dow, 100 points on the session, about the same as the S&P 500. NASDAQ still lagging, but just slightly in the red. And the Russell 2000, the small caps, up a minuscule 0.07% on the day. To help me break down this market action, let's bring in my co-host, and that's Kevin Hayes.
I got IWM on my list too. I like IWM.
This morning because initially,
It's
we
a
were higher.
ETF
Some of
with
the data at 8:30
contracts
Eastern
that
time
aren't
came
nearly
out.
as
We shot
expensive
lower, but we've been
as
choppy, most of the
QQQ and
session.
SPY. And it's got good movement, volume, all that good stuff.
Really
I've traded those in.
number, but
Very good.
ex-transportation,
I had
not the worst number
decent,
in the world,
results.
right? Up 0.2 versus unchanged. That wasn't bad.
Yes.
That headline number is horrible,
Maryland
right?
is
From 1% a month ago to down 2%, but it looks like it's dominated by transportation.
About 5 bins of holiday decorations, big bins, and
then we get to personal income and
good
outlays.
for you. Rest.
I thought it was a little warmer.
I'm telling you.
You know, that core PCE data that the Fed loves to look at, 4.7.
Rest is
But how about this,
resistance.
Tom?
Whoever wrote that,
Except personal
genius.
income,
Rest is resistance.
all of last
No,
month's
ma'am.
numbers were upgraded, were
Hey,
revised upward.
okay, C
So a little
bars.
stronger there.
We'll see you in a little
probably
bit.
why
We'll
you
be
see
here.
rates
You know I'll
climbing
be
higher
here.
this morning because of
I'm
that
still
number.
watching.
But that, you know, other than the
I like
core
watching how the
PCE,
pattern comes
no
in. More
real
information, more
headline
intel.
being
Y'all know
made
what I
out-
say.
out
This
of
is that
personal
hoppy
income and
pattern.
outlays. And then
I
new
know it's
home
probably
sales,
some technical
better than
name
expected. A little
and some
surprise
low to the
there.
high
Some of
to
the
the
housing
day,
data we've
whatever.
got this week's
But
been
to
pretty
me, it just looks
weak.
like the
But,
bunny hop.
Tom,
And when it
maybe
bunny
some of
hops like that
mortgage
above
ad
those
data
SMAs,
that's been firming up and going higher here.
going up.
Maybe it's starting to affect
And
new
higher
home sales
highs
as people are starting
and
to pull the
higher
trigger here with
lows.
mortgage rates
Yeah.
down off their highs. And then consumer
So
sentiment.
we'll see.
Another nice beat. We had consumer
Maybe we'll
confidence
finish
beat,
up today.
earlier, and now we've got consumer
Either way,
sentiment a little stronger.
I'm here for
so
it.
all things considered, Tom, it's kind of a wash
What
here
is
with
he
all these
saying?
numbers. And I think the big 1 minute candles that came out when the 7:30 Chicago time numbers came out, we're just kind of drifting, Tom.
Yeah, definitely. Those new home sales, that was a shock to the upside, but not surprising because in November is when we saw the 10-year yield start to come down. Mortgage rates started coming down also. But one stock that's not doing great today is Tesla, hitting more than 2-year lows
I can't take
earlier
it.
in the session.
Poor
There's some news
Tesla.
out. You know, last night
And I
tweeted
promise
out
you,
that,
I thought
hey,
about
Elon
it,
Musk said he's
but
not going to sell
that's
any
still
more
an
shares.
ugly swing.
I don't know if I should believe him this time
Jeez.
either. But let's bring in Caroline Wood, senior markets correspondent, to help us break this news down on Tesla. Doesn't seem anything that comes out right now, Caroline, can help
That
this
looks
stock
like that's a
as
nice little setup for a
the
break to the low.
sentiment is just
What do I
negative
know?
across the
That
board.
just rolled out of my mouth. I'm a
there,
beginning
Tom.
trader.
Certainly seems so. Tesla down another
But
2%
it doesn't
today.
look
It's
good for
down
Tesla. So let me get
18%
back
this
over here to
week,
what I know.
37%
It just
this
doesn't look
month,
good.
and 65% this year. It's the worst drawdown in the stock's history. Hit a new 52-week low today, but as you said, actually closer to 2-year lows right now. And there are many reasons for this drawdown. The weakening macro picture
Do
doesn't
you
help.
believe in that
Headwinds
company?
US and China
That's at a
in terms
2-year
of,
low.
competitive headwinds, Twitter
I
overhang,
don't know
and the
though.
fact that
See,
Musk has been selling what,
if that,
$40 billion in
I
shares
don't know.
to fund his
A lot of
Twitter
controversy.
purchase.
Too much for
One
me.
of those headwinds, though,
I
could
don't
be
know.
easing up, as you said. In a Twitter
But
Spaces combo late yesterday, Musk said,
nobody bets
quote,
against
I won't sell
Elon.
stock until, I don't
He's a
know, probably
genius.
2 years from now.
Mhm.
Definitely not next year under
He's a
any
genius.
circumstances, and probably not the year thereafter. We've heard this before, though, back in April and back in August, I believe, only to see Musk continue to sell shares to fund the Twitter deal. So no surprise that there's some investor skepticism about these comments, including clearly from you, Tom, as well. But also, you know, Musk also sounded very downbeat on the U.S. economy, which plays into those macro headwinds as well, saying, I think we're in a recession, and I think 2023 is going to be quite a serious recession, comparable to 2009, actually. Saying the warning is that means demand for any kind of optional discretionary items, especially if it's a big ticket item like a Tesla, will be lower. So we're getting some a little bit more downbeat notes, including from Wedbush longtime permabull on Tesla, Dan Ives. He warns that Tesla could actually miss delivery estimates for the fourth quarter and going into 2023, saying Tesla's fourth quarter deliveries are now likely to be in the range of 410 to 415,000, whereas the whisper number was for 435,000 there, so that would fall short. Saying Musk is viewed as asleep at the wheel from a leadership perspective for Tesla. He thinks about 70% of the Tesla sell-off that we've seen has been because of the Twitter overhang, distraction, as he calls it, with the remainder due to macro concerns. It still says that Tesla's an outperform, but slashed his price target to 175 from 250. And when you look at back, his price target was as high as 300 before Musk actually bought Twitter. So it's come down quite a bit. And I have to say, I was actually chatting with Dan yesterday before he came out with this note, and I did notice the caution in his tone when he was talking about Tesla. He actually had said to me that in terms of a fundamental basis, we're starting to see cracks in Tesla's armor. So no surprise that he's pulling back that price target a bit. But that being said, he's remained very bullish in terms of the broader picture. Said we're in the second inning in terms of the EV space. Tesla continues to own the landscape. He's like, you're going to have other competitors, especially from the 313 area code, as he calls it, Detroit, but it's not a zero-sum game. So bullish on the overall space, but definitely paring back those expectations for Tesla.
Caroline.
Yep, no guilt here, no shame.
Musk is talking about
Y'all, I didn't put anything up, not a
weakness in the
thing.
US economy.
And my dear
Remember,
friends,
it
I'm telling
was
you, it
a
is
couple
so
weeks
good to
ago that
have
Jamie Dimon,
caring
the other
people
big bank
around you.
CEOs talked about
Call and
weakening
ask, you know,
consumer.
we're doing
Now
this
we
for the
get
holidays,
retail
we're doing this
sales
for the
lower.
holidays.
Now
Do you
we
want to
get
join? Do you want to
durable
join?
goods
And I want
orders
someone so
lower.
bad.
I mean,
Oh,
vehicles
nothing
were a
sounds
big
better
part of that
to
durable
me.
goods weakness.
I promise you
So
guys,
what
than
Elon
being
Musk
on the
might
beach
be, and Dan Ives
with
for
a
that matter,
cocktail.
might
Are
be
you
acknowledging
kidding
is
me?
the
On
US
Christmas
consumer
Day,
is weakening
y'all go
in
and
terms of
enjoy.
their
But I promise you,
ability to
I
purchase
would
anything,
almost
especially
love to read like a good old
discretionary
fashioned
and
book.
big ticket items.
Does anybody ever
So
want to just get
hunkering
away
down
like
for the long
that?
term,
I just
it's
pray that
amazing to
on
me
Christmas
that Dan
Day,
Ives would
because last year
lower his price
Christmas,
target to 175 when
yes, I want to do
I've got a
nothing.
20-day chart
I
up
just
in
want to
Tesla.
chill.
It was
Y'all, I
198,
promise you.
almost 199.
Nobody loves
less
putting up
than
a Christmas
20
tree
days
more
ago.
than me.
So
Oh my
these
goodness. You can
downgrades
beat me
are
putting it
getting
up.
serious, Caroline.
Thanksgiving dinner, y'all better hurry up.
It's interesting because,
Because
as we
as
said,
soon
Dan
as it's
is
over,
always
I will
kind of
start
the
putting it
perma
up.
bull, but that
Loved it. Left it up
$175
all
price
the way
target's
through the
actually
new year.
pretty low compared to the median. The median's just over 256
I'm good.
right now, which I think is
I
important to
did
know.
that for, I can't tell
Analysts
you how
overall,
many
I mean, this
years.
is a company that
I enjoyed it. I have the
so much
pictures. It was
discrepancy in
lovely.
terms of the ratings
I
and the
love
price
seeing it.
targets,
There's
but
nothing I love better
24
than going
analysts
to a
have a buy
department store with a
rating
beautiful
on
Christmas
Tesla right
tree.
now
Love
versus
it. Love the
13
lights,
holds
the
and
songs,
4
the
sells.
music.
But I think we also have to keep in
But
mind
I
Tesla
tell
is
you,
down
it's something so
65%
freeing
this year.
about
So
enjoying
whether or not
somebody
you say that's
else's.
because of the macro
I don't have to
headwinds,
clean it
Twitter
up. I don't have to
overhang,
do
or
any
what,
of
I think
that.
some of this
And being
downside
able,
has to be priced in, I would think,
I
at
don't
these
know too. It's
levels.
something about the
But
weather being so
we did hear from
warm
Canaccord
that puts you in a
Genuity
different
yesterday,
frame of mind. You know, if it was snowy, but no, y'all, I don't miss any of it. I'm sorry. I said it. I said what I said. I am going to enjoy Christmas. I promise you. I'm intentionally going to my favorite restaurant on the beach. Y'all, when y'all come to Playa del Carmen, this is not a plug. These people don't owe me a dime. I don't know them. They don't know me. But I know good food. What is it? NT Beach Club. I don't know who was in that kitchen. But somebody's in that kitchen, and the food is so delicious. So, yeah, that's my secret. Anyway, it used to be. So, you know, now I have to find a new spot, but that's a great place. I'm telling you, the food is so good, so good. And it's just, it's beautiful.
So we just have to hold out hope that sunshine
yes.
comes sooner than later. Certainly not today.
See, I don't know. Oh, no, I had to put it. I don't know if I had to, but I felt like I had to. I don't know that my kids, yeah, they would say something if I didn't. So I did it all the way up to the end. Until I think I either gave the tree away, sold it. I can't remember. But at any rate, no. And then it's a whole different vibe when you're looking at palm trees and birds. And it's just, I don't know. It's hard to get in the mood. When I tell you all yesterday, my neighbor was playing the best Christmas music. I had to open my door. I was like, oh my gosh. Now that I love. But I don't want to have to do it. I don't want to know what it is I don't want to feel obligated to do it anymore. I don't mind doing it, but I just want to do it on a smaller scale. It was that having to do the,
if you look at the wages,
you know, the
part of
biggest
the
tree,
the real wages,
the whole setup, the table.
It's kind of reflective of, hey, the consumer's still willing to
I'm gonna go
spend
to the
and wages
mall.
are going up, even though
Look at those beautiful
prices
decorations.
that they're paying are going down
And
slowly.
keep it simple and keep it moving.
A good employment environment also.
QQQ is doing.
We're getting closer to that equilibrium where the real wages are starting to catch up a little bit as inflation comes
Did anybody
down.
paper trade today?
My
I know
biggest
I'm supposed to be
concern,
paper
though,
trading
is,
myself.
you know,
That's what I should be doing.
68% of GDP, right? Closer to 70%.
They're paper trading.
And even though we've had a revision to GDP to the upside of a 3.2% annualized, what concerns me is the higher borrowing cost, the depleted savings, and then the revolving credit balances that consumers are facing right now. And I think that this is really a first half of 2023 issue, because I do tend to believe what Jamie Dimon and Elon Musk are talking about in terms of, you know, maybe not the severity of the downturn in 2023, but a significant downturn. And I think that consumers aren't as well positioned for this one as maybe what they thought they were about 6 months ago. Because I think that they've been waiting for this recession that they keep hearing about.
You know, so many good resources out here. And I haven't vetted any of some of the smaller, you know, independent YouTubers. But when I scroll through like my homepage, YouTube does a wonderful job of suggesting, you know, great resources. There's some good things, and I don't know if they're listening. I don't know what it is, but they're certainly on target because they always send me great things from TD Ameritrade. So maybe I need to start searching.
That's just something that is
like
my concern.
Bloomberg's or something, just something else, so that I'll be getting something refreshed in my feed. But I'm telling you, it's some good stuff out here.
Because I do see a silver lining in the back half of 2023. And I think as an investor, you know, what you want to do is you want to keep an eye on companies.
See, I like that. I'm saying, meaning, I appreciate that people are taking back their time.
That are,
you know, don't feel obligated to do it, because that's a lot. I don't miss the consumerism, you know, around the holidays. That part, I don't miss that.
Whether the next 6 months.
Yeah, and Joe, to that point, real quick, I want to go back to you on this. You know, the effect of mega cap tech, right, at this point. You know, these are some really good companies with really good free cash flow, really good solid balance sheet, the best out there, some of them. They're getting dragged along with a lot of these maybe growth names that don't have that profitability. Is that also, you know, reflective that,
you know, here's a video about momentum.
Weakness might be down the
I
pipeline.
need that. I'm saving that for later for me.
We see any type of rebound like you mentioned in latter stages of next year.
Yeah, I don't think we've seen capitulation yet, guys. I don't think we have. it's been that grind, as we kind of talked about. It's been that slow grind down. Capitulation hasn't hit. I think, you know, we saw the market trade down to 3,800 yesterday in the S&P, bounce back up. I think it needs to flush.
Most of the time when I'm pinning this stuff to the community tab, I'm pinning it for me because I know it's stuff that I need. I figure if I need it, somebody else might need it too.
Within the indexes, they're going to get hit. I think once that happens,
this video I'm pinning is about momentum.
Then you'll start to see some of the bottom feeders start to come on into this market as value investors and look for those opportunities. I think we're getting closer. I do. I really do feel like we're getting closer. I just don't feel like we've had that real big drawdown. And look, when we look at seasonality, we didn't get that Santa Claus rally. If you look at what's happened in December, and I want to check my notes just to make sure I can get this one right, a 6.3% decline this December. Excuse me. That is the fourth worst in S&P history, at least in the last 100 years.
I have a few Christmas items I put up because of my mom. She had special items I put up.
It's just been that grind down. It's just it's been painful for investors this month.
Yeah, lack of buyers out there at this point right now. And I think, Joe, to your point,
really?
Looking at Apple, I'm watching Apple really closely.
Oh my gosh.
If we get down,
I bet you like home decor was really beautiful in your house, Maryland.
That we saw in June before
that's exciting. I would imagine like the holidays were really beautifully decorated.
2023, if we see some sort of capitulation to the downside here. All right, guys, let's take a quick break here.
And then y'all's
We're
tradition.
take a look at the chip sector with the discussion on NVIDIA, which is
our tradition was brunch
so far this
at
year.
home in our
Right
pajamas. We did that when the kids got older. But when they were kids, you know, it was just regular opening your Christmas gifts in the morning. You know, we did the old cookies out for Santa. I did all that. So I'm saying, I think I had the full experience.
When traders tell us how to make thinkorswim even better.
The full experience,
We listen.
So I'm cool.
Because platforms this innovative aren't just made for traders.
I know.
They're made by them.
Isn't that
Thinkorswim
something?
Trading from TD Ameritrade. It's a 13-hour flight. That's not a weekend trip.
15 minutes.
So why not take off? You
Okay,
downloaded the
peeking
TD
over
Ameritrade
here.
mobile app so you can quickly check the markets.
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set.
This is a bunch of
Have a great flight.
consolidation, y'all.
We'll see ya.
Okay, this thing is consolidating. I am going to have
Choose the app that fits your investing
I just
style.
want to tell y'all some cheesecake. I've had this cheesecake and I've been like I'm going to eat this cheesecake. Okay, so I will be back here. Looks like it's just consolidating. You see, it's doing this thing. So I'm waiting for a break up or break down one way or the other.
Welcome back to Fast Market
yeah,
here on the
that's
TD Ameritrade
sweet.
Network. Let's bring in George Tillis, Senior Markets Correspondent here on the network.
I
to
cooked
discuss, our next topic
blueberry
here, and that
pancakes
would
for
be
my
NVIDIA.
grandboy.
As I mentioned, shares down nearly 50% so far
See,
this
those
year,
are memories
George.
that you
It
have
seems like
for
some of the
forever.
metrics and some of the warnings from
All right,
other
y'all.
competitors
I'm going to take a
within the whole
break.
chip space
I'll be back in a
reflective
little
of some
bit
weakness moving forward. How does NVIDIA look
because
here?
it's just consolidating. So
Yeah, this
I'm gonna
is
grab me a piece
interesting.
of
I mean, we know NVIDIA
cheesecake.
is
I'll see y'all in a
essentially a
bit.
leader in graphics.
May. It had a huge
Hey,
gap
y'all
down.
back.
It's completely filled that gap, and then it got to the top, and it's
cheesecake
having
was
trouble.
yummy.
So the
Sorry.
technical
I had to
analysts
do- I
are
had to
loving this
smash
one
that
because
off
it fits all
camera.
the narratives.
It was phenomenal.
Right now,
It was
I'd
delicious.
love to hear you guys' thoughts on
We
it,
gotta go
but you know,
chat on
it's just
this.
kind of more of the same in that
These
Walmart
contracts.
is doing better than its peers. It's got some headwinds on the macro side and a little bit of tailwind with the deal discovery.
Okay, we might be able to come out.
Landon, the catastrophic move that Walmart had last May on earnings when, you know, Walmart, Target, both missed on discretionary versus essential inventory, and they had inventory problems. I want to focus on the same thing that you were focused on, the total mentions versus sentiment, because this is some of my best or my favorite Likefolio data, Landon, because it shows it's easy to interpret, right? The size of the circle is the size of the company, and top right is where you want to be. But here's my question to you, Landon, and this is kind of something we've never talked about. Top right is what we're always looking for in this scatter plot. But if you can only choose one, Landon, I'd rather have right than top, correct? Because right
Absolutely.
is actual earnings and growth and the better of the two numbers, correct?
You know what? I would rather have unhappy customers but lots of sales. I hate to say it. For the short term. Long term, maybe happiness is more important. I don't know. You can argue that. But right now, absolutely. And what's interesting is if we could plot the movement here, Walmart is moving to the right and moving up. So they've got it going in the correct direction.
Yeah, Landon, on that scatter plot, you know, Kevin mentioned, you know, he'd rather be to the right. See, I look at this, maybe the scatter plot, and tell me if your data kind of reflects this. People are being forced to go to Walmart now because of inflationary pressures, and that's why unhappiness is at that low level. So my idea is for the long term, you'd rather have a happy client because that's going to be a returning client when maybe the macro environment or inflationary environment improves a little bit. Is that what you kind of see out of your data, that people are getting forced to go to Walmart?
You know what? I said, let's go best of both worlds. Why not be nimble with your money? If you want to go short term, Walmart's the place to be. But then as the macro conditions turn around, go to the Target, go to the Costco, because then you've got happy customers that have more money all of a sudden. So I think there's a lot of ways to read that chart. And I think you're both right, frankly. And that's what I would do. One other angle that I did want to talk about is grocery delivery. This is actually a very, very telling indicator here for Walmart. So grocery delivery overall, just all grocery delivery, all companies, all sources, is down about 28% year over year. Huge move down. A lot less people are getting groceries delivered. It's more expensive and they're looking to save money.
Yeah, it's nothing like a good paperback
Walmart
book
grocery
on the
delivery
beach.
is up 10% year over year. They're the only one that's up.
my
All
whole
the
body
other
relaxed
competitors are
at just
down,
the
and the
thought
group
of
as a
it.
whole is down 28. So
Yep.
they're
Just
doing
bring me a
really
pineapple
well
drink,
with grocery
sir.
delivery.
Don't
Their
talk.
costs look good. The customers love it, and they're continuing to
keep
use it
them
more
coming.
and more, and they're leaving competitors for it. So that is a winner for them, and I think
I be
it's something
talking
that they're
so
going to be able to
crazy.
hang their hat on in upcoming earning calls.
Drink water, hydrate.
Yeah, Kevin mentioned that yesterday. 90% of the population lives within 10 miles of a Walmart, and their grocery business continues to expand. Now, they don't have earnings for about a month and a half here, Landon, but if you had an earnings score on Walmart, what would it be?
It's just slightly bearish. We're fairly neutral. I think we're -10 or -11 on the score, but just slightly. They've got a lot of things kind of working against them on the macro side, and the happiness isn't as high as we'd like it to be. But you know, I do love the grocery play there, and I also like that they've got the deal discovery working for them. So right now, I don't think it's a terrible investment, but if they did have earnings, we'd be -11.
-11. All right. Great stuff as always. Great data as always from Likefolio. Hey, Landon, thanks for being here today and have a great holiday, buddy.
Absolutely. It's been a great year. Happy holidays. Merry Christmas. Enjoy your new year and say hi to everybody for you. See you guys.
All right. Take care. That's Landon Swan, co-founder of Likefolio, breaking down Walmart and the data. But Kev, you know, yesterday we looked at Walmart a little bit on, you know, the bearish side with our example trade, you know, based on low volatility environment, maybe that it's outperformed, maybe it's going to come down. How do you want to look at this based on what you heard out of Landon as far as Likefolio data and maybe some of the other, you know, Greeks involved in this trade?
Yeah, you're right, Tom. First thing, they don't have earnings till February 21st of next year. So they're still almost 2 months away from an earnings report. So, Tom, two
Okay,
things to
so y'all
watch.
know what I'm
This is
doing,
another
just
time
looking,
where we're going to
looking,
use
looking.
the trade tab of the Thinkorswim platform and the option statistics page and look at the implied volatility, Tom. Right now, the current IV percentile, that means where does the current implied volatility sitting around 20.3, where does it sit on a scale from top to bottom? And the IV percentile, Tom, is 7%. So it's in the lower 10th percent. That means that implied volatility is cheap. Can it get cheaper? Yes, but not much cheaper, right? So, Tom, that leads me in my strategy choice here. I think I'm interested in a range bound strategy. So I'm doing the January 20th and then
I love that they give you the
January
actual
6th, so
call, the actual
two-week,
play.
Calendar spread that takes you through the holidays, Tom. And I'm just doing the 145 strike. So it's slightly higher than where we are at 143.5, but it's more, I would call this more range bound than anything else, Tom. So it would outperform on a move towards 145, Tom, but you're probably fairly profitable if it stays right where it is and you collect your theta over the next 2 weeks, Tom.
Yeah, let's break this 2-week wide trade down. Buying the January 20th monthlies that expire in 28 days, the 145 strike call. Selling the near-term January 6th weeklies, those expire in 14 days, the 145 strike call. So a 2-week wide call calendar to the upside. Kev, you're only paying roughly about $1.10 debit for that. So that's going to be your risk, $110. You mentioned getting into a position that's relatively neutral for an inexpensive price. The break even's about 142.50 on the downside and about 140, nearly 148 on the upside. So you do have that range. Stock has started to consolidate at the flat line over the year, right near its 50-day moving average. But Kev, you've got some assignment risk on that short option up until expiration over the next 14 days. But this is positive time decay because you're short the option series that's closer to expiration.
No, I haven't read it yet.
In the January 6th one. And then
And
also you've got holidays, Kev. You
You
mentioned
it's a
shorter term trade, but we're closed. Markets are closed on Monday.
If you got the all access pass, I want to say you got a free download
also
on
for
Amazon.
The New Year's. So
that's probably how I would do it anyway. I
Is that what you kind of look for, where market's not open, but time decay still happens?
That's basically all I can get here.
Exactly right, Tom.
Unless somebody brought it to me.
And that
I
level
would do all
of
my books,
theta
e-books,
or decay will only pick up as you get closer to that January 6th expiration. And then, Tom, there is an opportunity, since it's a 2-week wide spread, to extend duration into that January 13th expiration as well and chip away at that net debit, which also chips away at that break-even price, Tom.
Yeah, and, just on the rolls on a calendar on a week-to-week basis, if you looked at like the near-term December 23rd to the 30th, that's over $1 per roll that you could potentially get or more based on where the stock price is. You've got to take a look at that and volatility levels also in timed expiration. So yeah, good look at an upside, slightly upside to neutral call calendar here in Walmart as an example. But coming up after the break, we're going to take a look at moves in Amazon, whose shares are down 50% so far this year, and they hit nearly 3-year lows just yesterday. Fast Market's coming right back.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on tdameritradenetwork.com to all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Welcome back to Fast Market here on the TD Ameritrade Network. Before we get to a discussion on Amazon, let's bring in Ben Lichtenstein. He's a senior futures contributor here on the network. Help us break down these markets. Pretty choppy today, Ben. Looks like we're all positive for the moment at this point. But we've got the S&P 500, NASDAQ, and Russell all firmly below their 50-day moving averages. The Dow's trying to hold on. What are you seeing here in markets?
Well, the 50-day moving average is below the 200 as well. Last I looked, the Dow was the only one that was still holding up above it, Tom. But to your point here, you mentioned kind of a choppy trade. The market just doesn't really seem to know what to do today. We went into the numbers this morning at 8:30 a.m. Eastern, if you remember, right around 38, 34. We were up about 1/3%. We shot down around 1/3% and then back up. So, and here we are right now as we stand again, basically right where we were this morning into the data that came out, that personal income and spending numbers. Saw the SPX down to as low as 37.64. The Russell tested and traded down to 17.26. But the rally back has the Dow back above 33,000. You could see it 33,160, and the NASDAQ just below that 11,000 threshold. Now, Tom, with all this chop, I like to take a step back, kind of focus on the bigger picture. And when I look at the November levels in the SPX, we saw a bottom, a low around 37, a high up around 41. So hanging out around 38, 39 for the most part in the middle of that range and just below it. But it does seem like traders have kind of checked out already, right? We're sort of in this holiday type trade, not a lot of conviction. We're seeing range-bound price activity, not only in terms of what we saw throughout the month, I might have said November, but December, that 37 to 41 high. But I just want to point out that even range bound today, we're holding within the range that we established yesterday, that big sell-off yesterday in the rally back. So just not a lot of conviction, no.
Yeah, you'd expect that liquidity probably going to be drying up as we head into the end of the day here. But Ben, one area or asset that's doing pretty well today is crude oil, up over 3%. We're hitting 3-week highs if we settle near these levels, finally hitting that $80 a barrel level.
Yeah, big move up in crude today and kind of continuation of the pattern we've seen right off that $70 level we were at just a couple weeks ago. So $10 to the upside in 2 weeks. And there's some fundamentals behind this. We heard basically the RIA news agency, that's the Russian state-owned news agency. They said that, Prime Minister Alexander Novak, the deputy prime minister, Russia's deputy prime minister Alexander Novak was saying basically that Russia's oil could fall 5 to 7% in the beginning of 2023. There's speculation that Baltic oil exports could fall 20% in December. So that's going to rally the price of crude oil. We've seen the dollar, which has been coming off for the most part. So again, a lower dollar helps support crude. But yeah, it was just a couple of weeks ago we were trading down around 70. That's a November low. And we also have the
Fibonacci's video. I'm posting that.
Keeping it on the $83 level. So if we can get back to that level, would be key. But lastly, I wanted to point out in terms of crude rallying, there's a lot of talk about all these flights that are being canceled and some of the demand destruction that we'll see for crude as a result of that, and the weather that's sweeping across the United States. But ultimately, it does seem like the geopolitics and the news out of Russia is kind of trumping that one and that demand destruction. And we're seeing, again, prices higher today.
Yeah, maybe outlook for China reopening over the next, several weeks also maybe putting a bid into crude oil at this point. All right, great stuff. Thanks to Ben Lichtenstein, host of the Future Show here on the network. But now let's bring back Kevin in. Kevin, we're talking Amazon. You know, I thought it was fitting going into the holiday shopping, the end of the holiday shopping season. But this stock, Kev, hit nearly three-year lows just yesterday. It seems like analysts and everybody that uses Amazon, doesn't pull away from using Amazon. They don't make much money, if any money at all, on the retail side. But now we're seeing slower growth in their cloud business, which they're the leader in. What are your thoughts here on Amazon?
Yeah, there's three big things going on in Amazon right now, Tom, that every investor looking at Amazon should watch. And that is, first thing you just mentioned, AWS. Do you realize, Tom, that 100% of their operating income in Q3 came from AWS? 100%. Think about that in the size of the company that Amazon is, and one part, is responsible for 100% of their earnings. So AWS continues to grow, 34% market share in a part cloud computing that's only going to get bigger. The numbers are blowing up over the long term. So annual growth through 2030 of 15.7% in cloud computing. So an incredible opportunity with AWS. Now, e-commerce. They are, it was hard in 2022 to look at Amazon over 2021 because the numbers were so massive in 2021. So e-commerce being light, they're still a massive e-commerce player, and they're always going to be. E-commerce isn't going anywhere, Tom. And then the last, and this might be the most important, we talked about it with Google Alphabet earlier in the week. Digital ad spend. In 2008, digital ad spend dipped. In the start of the pandemic, it dipped. And it always, Tom, always fires back to better levels long term. So digital ad spend, which is a growing part of their business, annual growth, 13.9% expected. So this is going to be a big number going forward, and that will recover. It always does, and Amazon will be a major player there, Tom. So a lot of reasons to like Amazon going forward.
Yeah, I think a lot of investors and traders want to know what type of duration it rebounds in, because the macro environment for the next quarter at least pretty dismal for digital ad spend. Kev, but I looked at this one. They've got earnings at the beginning of February, so I kind of want to avoid that. Maybe they have a good holiday shopping season as people maybe put off spending towards the latter stages of the month here. And as I mentioned, just off at those nearly three-year lows just yesterday. So I looked at something really low cost to the upside as far as an example trade, using the option market to take advantage of maybe a bounce back. You know, RSI levels were getting into the mid-30 levels, so maybe potentially oversold. Really inexpensive way to look at this. And Kevin, I didn't know if you knew this, 10 billion shares outstanding in Amazon after their stock split. So, yeah, that's hefty. That's like a Titanic trying to move in a canal when you look at the share float out there that trades publicly. But looked at a call condor to the upside, Kev, really inexpensive, where I'm going to go out to January 20th monthly cycle, 28 days till expiration, buying the 83 strike call, which is currently in the money by about $1.50, buying one of those, selling one of the 86 strike calls, selling one of the 89s, and then buying one of the 90 strike call. You're paying roughly about $1.25 for that, $125 in risk, but you've only got one break even because it's unbalanced, Kev, and that break even is going to be 84.
Yeah, you know, it's interesting, Jenny. I was actually chatting with Dan Ives yesterday before that note came out, and I noticed that he was turning a bit cautious, even said so. He said Tesla's starting to see cracks in its armor. Still an outperform rating, but slashing his price target to $175 from $250. He did have a price target as high as $300 for Tesla, before Elon Musk bought Twitter. So really blames about 70% of
Marilyn,
the
you are
sell-off
living.
Tesla shares since buying Twitter in October because of that Twitter overhang. About the other 30%, he says, is from
You are living and
macroeconomic
enjoying
conditions.
your
But
life.
it's not just the macro picture and the Twitter overhang that has been weighing on shares. It's also the fact that Musk has been selling so many shares in order to fund the Twitter acquisition. He did say, I won't sell stock until, I don't know, probably 2 years from now. Definitely not next year under any circumstances, and probably not the year after. We've heard this before from Musk. Remember back in April and then back in August, he said the same thing and then continued to sell. So there's definitely some skepticism about those comments. Should be taken as positive, but Tesla's share is still in the red today. I will say only down about 0.7%, whereas they were down more than 2% just a bit ago. So starting to see some of those losses get paired, but Tesla really taking it on the chin. It's down 17% this week, 36% this month, 65% this year.
I know, and I was looking at the week-to-date losses as well, just thinking, wow, I don't remember the last time I saw a slide of that magnitude in Tesla. And I was talking about this name with Nicole a bit earlier when it was down more, like you said. And she made a really good point, because I was like, this is a Tesla-specific story, thank God. But she was like, it's not necessarily positive either. So I don't know what's better, to relate their headwinds to Twitter and Elon Musk, or to have their own Tesla-specific problems, which I think is a really good point. Right now, it seems all of it doom and gloom for Tesla, which we will upvote today. We will continue to talk about Tesla to close out this week. Our next name here, though, is Meta Platforms. Meta Platforms having a rough year, down over 66%, and not getting great news today either, settling actually to pay $725 million in a class action lawsuit that alleged that they were basically breaching some user data consent.
Yeah, and Meta's actually having an okay day today. It's up about 0.5% and only down 1.4% this week, and basically flat on the month. So compared to Tesla, really doing well. But yes, it agreed to pay $725 million to resolve a class action lawsuit. Basically, that it allowed third parties like Cambridge Analytica to access users' personal information. You may remember back in 2016, there was the case that Cambridge Analytica used Facebook's data in order to support President Trump. So this relates to that. According to the proposed settlement, the payout would be the largest ever payment in a data privacy class action. But back in 2019, we also saw Facebook settle with the FTC and agreed to pay a $5 billion penalty, while accepting new restrictions on how it handles user data. So, you know, when you take a look at that $725 million, it's a lot for you and I, Jenny, but it's pretty small for a company like Meta. I mean, it has a $310 billion market cap. So definitely not weighing on shares today, because it's really kind of a small amount, I think.
Right, and typically I like to think of when we see these deals, at least settlement deals, that oftentimes is actually seen as a good thing from the street, because finally we have a resolution. I mean, this has been going on since 2018, so I think the street is at least moderate on the fact that we do have some clarity after what has been a string of lawsuits, which then prompted the name change, of course, back when they were Facebook, is when this was first unveiled, and now they've tried to transform into the metaverse, which I'm not really sure that's working either, but to move away from their social media identity, really, which I just find so interesting. Now, we'll downvote Meta today, as our last name has made moves this week, and that is CarMax. CarMax was down significantly after their quarterly report that widely missed expectations. They also highlighted a lot of cost issues and the fact that vehicle affordability right now remains a huge issue for customers. And I think, of course, I mean, the cost of their average vehicles was still up about 2% for the quarter. So to me, right now, if you have excess inventory, why are we not seeing prices fall? I guess that hasn't happened yet. But now they're seeing a nice day today, up 4%. So perhaps giving, or at least erasing, some of yesterday's loss after they touched 52-week lows.
Yeah, it's certainly a positive day for CarMax.
So many
although still down
52-week
14%
lows.
in December and over 50% this year. As you said, reported disappointing earnings yesterday after car buyers really faced higher prices and, of course, higher interest rates. In turn, analysts are slashing their price targets on the auto retailer. B of A lowered to $49 from $100, so more than half, keeping an underperform rating on the shares. Said based on the material miss in Q3 and tough market dynamics, the analyst is lowering his EPS estimates in fiscal year 23, 24, 25, and 26. Meanwhile, kind of on the other side of the spectrum, Baird cut its price target to $65 from $82, but kept an outperform rating on the shares. That analyst said that basically he got CarMax wrong in 2022, and it's too late to downgrade it now. But he expects affordability to improve in 2023, which should then impact CarMax's shares. So, CarMax only down about 3% right now this week because of today's gains. So definitely pairing some of those losses. But I should note that Baird analyst isn't alone in the outperform camp. CarMax, as we said, is down 55% this year, so doing better than Tesla. But 50% of analysts at this point have a buy rating.
And that in itself is ridiculous to me, the fact that CarMax is outperforming Tesla now on a year-to-date basis, because it's been more of a slow and steady decline in this name versus Tesla's has felt a little bit more sudden, definitely, especially even given the move this week. CarMax, though, has price targets ranging from $26 a share all the way to $141, which I think makes that so interesting. So we'll dive more into that name. We will upvote CarMax as well as Tesla. We have a nice theme going for our upvotes today. But coming up next, we'll be charting both of these names with our chart master, Rick Ducat. Stick around. Next Gen Investing. We'll be right back.
Life is for living. I agree, y'all.
Whether you're an experienced investor or just getting started, TD
Oh my
Ameritrade
goodness, I'm
offers a
gonna sleep
webcast
so good.
that's right for you. The platform demo webcast series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate TDAmeritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investment. Don't miss Trading 360 at 11 a.m. Eastern and the Watch List at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Welcome back to Next Gen Investing. I'm Jenny Horn, joined by Caroline Woods. And Caroline, it's time to chart and trade our upvotes, those being Tesla as well as CarMax. We have a nice auto theme going today. Now, Tesla, we have Elon Musk pledging he's not going to sell more of the shares, which I will believe that when I see it, because that would be not the first time he went back on that promise. We also have news that Dan Ives is turning perhaps more cautious. All of this not great for a stock that's down over 69% from its highs.
Yeah, Jenny, Tesla certainly has its fair share of headwinds, not just macro, not just Twitter overhang, but there's the fact that Dan Ives is now saying that it could miss on Q4 deliveries. And obviously it has competitive headwinds. It has, Elon Musk says that we're in a recession now and will continue to be in one next year that's comparable to 2009. And it means people won't be buying as many big ticket items like Tesla, but analysts are still bullish. So let's see what the chart says with chartered market technician Rick Ducat. Rick, I want to bring you in. So we're seeing a 2-year low for Tesla. We're seeing the worst drawdown in Tesla's history in terms of the 65% a year-to-date decline, but analysts overall are still pretty bullish, just maybe trimming those price targets. What does the chart tell you, Rick?
Well, first of all, I just want to go on the record saying I do not believe Elon. I'm not saying he's lying, I guess, but if he needs to sell stock, he probably will. And the drawdown is actually even worse if you consider from those yearly highs. We're down about 69% since those highs of 402.67. So pretty rough day yesterday for the Tesla bulls, as we've said. We finished down about 9%. And I chose to include standard deviation channels on our chart here today. And what these are is we take a line of best fit based on closing prices. That gives us our blue linear regression line there going across the middle of the chart. And then we simply extrapolate and use standard deviations to the upside and the downside, +1, +2, -1, -2, etc. And the reason we do this is that this gives us a way to compare price history to itself and to its own volatility. And this helps us make an educated guess, at least, where we might expect to find some support or resistance when a stock is making new lows or new highs, respectively. So that's why I included that one here, because Tesla is making
Let's
those
hope,
new lows
Marilyn.
today.
I'm all about it.
So we can see that yesterday's move took us
hope
below
so.
our -1 standard
'Cause that's what
deviation
I'm
channel,
banking
which
on.
came in near 138. So that's not good for bulls. We broke through a support level. And I'm not saying that this is going to be a continued downturn here, because you can see that, in this name, we bounced back from going above and beyond those -1 and +1 standard deviation channels in the past. But I'm saying it doesn't look very good for the bulls here. Looking at the RSI as well, we're deeply in the oversold point. We're down here below the 20 handle in RSI. 30 is oversold. So that's significant and potentially indicates further weakness to come here. So where could this move stop? If it keeps going here, we don't really know, but the -2 standard deviation channel comes in near 82, which is quite a slide here from our current price of 123. Granted, Tesla can certainly move. It wouldn't be impossible for that to happen. It would be pretty brutal for sure, but it's not a guarantee we're gonna make it there. So support at 82 based on this study, resistance at 138.
Right, and Rick, seeing RSI break down here as momentum is just continuing to fall. And I think finding a bottom is something that so many people are tuned into right now, because I guess you could argue that you'd be getting Tesla shares on sale, but also considering that we could see some of this weakness persist into the new year. And right now it's a very quiet trading period. So walk us through an example trade then leaning more neutral to bearish in nature.
Well, given the overall situation, we've got pretty bad price action, yearly lows, breaking through support, and breaking through the trend line of our short-term downward channel here. All those things together do not exactly paint a rosy picture of bullishness here. So an example bullish trade may not be the most appropriate thing to work with here today. You certainly could try to take a contrarian view and think that the stock is due for a bounce, but I think that it might be more appropriate today to look at a bearish example trade. Didn't necessarily want to buy a straight put in Tesla because it's very expensive due to the high implied volatility. So the example trade that we're looking at today is a short call vertical, -1, February 17th, 135, 140 strike, call vertical at a 180 credit. So this puts us in a more neutral to bearish situation here without the aggressiveness of a long put here. This break even also puts us near the -1 standard deviation channel, which is near about 138, as I said. So we're banking on price staying below that point. Our actual break even is more like 136.80 based on our credit received. So total risk, roughly 2-to-1 risk reward, 180 max profit versus 320 max loss. So we are risk defined as well as we set up this example trade, Caroline and Jenny.
So we're going to shift from a car maker to a car retailer and talk CarMax now, Rick. It's actually outperforming Tesla this year, down about 55% this year, and actually up about 4% today. But several analysts, or a couple analysts, are slashing their price targets after disappointing earnings. Median price target's now about $62. It's trading around $59.50, say. What does the chart tell you, and where does that $62 price target fit in?
Well, that $62 price target is fairly close to our linear regression line on this chart. I included the same standard deviation channels as we did in our previous study. So the linear regression line, once again, is that blue line. It comes in at about 63.67, so fairly close to that price target of 62. And really what the linear regression line represents is some idea of fair value for the stock. That's typically a more bullish pattern, but I wouldn't bank on that. It can go either way. Really, the important thing to look for is some kind of energetic breakout beyond either trend line. So what do we do next? We look at momentum. With the RSI, we can see that we did stop short of going into that oversold area. That is a small feather in the cap of the bulls there. That's a better development, but still the RSI trend line is going down, and momentum is still tilted toward the bearish side here, despite the gains that we're making today. So really what you'd be looking for support and resistance, the linear regression line near about 63 to 64 for resistance. And given that we are making new yearly lows recently, I looked at the -1 standard deviation to give us some potential support. That comes in around 46. So once again, a fairly steep drop off if we were to get to that point. Definitely not a guarantee though.
Yeah, Rick, I have a lot of thoughts on this move up today because we saw arguably a very disappointing third quarter. I actually saw one analyst highlight the ruinous impact of rising interest rates on the auto industry as well as inflation. So that negative story has not gone away. That narrative has not changed, but yet shares are higher today. So to me, this move doesn't make much sense. And you know what else doesn't make much sense are the analyst price targets on this name, ranging from $21 a share all the way to over $140. So to me, it's like the 141 doesn't make sense. $20 doesn't make sense. So what are you thinking for trading this name today?
Yeah, I definitely agree with you. I was kind of scratching my head at some of the analyst stuff you guys were mentioning here, but I chose once again to take a look at an example trade here. And the example trade that we're going to put together is simply a long put. +1, January 20th, 52.5 strike put at a 75-cent debit. So the thinking behind this
we saw new home sales beat. Home builders aren't upbeat on that news, still seeing lots of red. Tell us more.
Lots of red. And so today we're looking at the iShares home construction ETF. That's down today and down 26% year to date. So is Lennar. So is Toll Brothers, as well as DR Horton. They're all down on the year, and that's because home builders and confidence is pretty low now. Now, while November new home sales, they were up for the second consecutive month, just like you said, Caroline, and this is even as prices continue to rise and buyers see some of the highest mortgage rates of the year. Sales of new single-family homes were at a seasonally adjusted annual rate of 640,000. That was up from that revised 605,000 in October. But the median price for a new home, it also dropped to $471,000. That was down from $493,000. And back in November, we started to see more building permits drop. They dropped 11.2% on a monthly basis and 22.4% compared to a year ago. The Mortgage Bankers Association said that, or their purchase applications index, it was also down significantly. So new home sales beat, but home builders are down and some of the existing home sales are down. It really is just a huge mixed bag right now that may not look good for home builders as we go into the new year.
Right. And I also think the fact that affordability has not improved really at all from consumers. Renita, I know you just moved. I think this also applies to the rental market here because right now rental prices are also sky high. So I'm just wondering when we're going to see some normalization. I'm selfishly thinking of us as the consumers here, but we've seen these home builders fall. We've seen mortgage rates, obviously rocket, but why haven't we seen prices decrease yet?
That's a good question. I'm guessing that they're waiting for some sort of a tipping point. Right now, rents are rising because they can rise. Mortgages are rising and people are looking for alternatives who cannot buy a house right now or who don't want to buy right now with the rates the way that they are and the prices that
I'm still watching
elevated.
QQQ.
So you'll have to rent or move
You're
in
free
with a
to
family
join
member,
me.
right? And
I'm
so
waiting to see if she's gonna break up, break
can
down,
make
or
the
whatever.
money. So they
Looks like I may be swinging.
And I'm just hoping that
some
these
contracts
prices come down as
till
well. I'd like to buy a
Tuesday,
piece
for
of
sure.
property fairly soon.
So that's what's happening. Welcome,
I'm in
welcome,
your
welcome.
camp,
Don't
Renita.
forget, hit the like,
But, I just
subscribe,
want to add in really
share
quickly, when you think about new
button.
home sales versus
And
existing home
welcome,
sales,
welcome,
keep in
y'all.
mind that a
I
lot
don't know
of these
who all was
builders
here
are
besides
offering
me and
big
Elle
incentives. I think there was
and
a number
Marilyn. I
about
think
60%
they
of home
left.
builders offering incentives for purchases
But
of
it's
new
10 of
homes.
us. Hey,
A
y'all.
lot
Hey,
different
don't
than
forget to hit
existing
the like
homes where
button.
people who are
If you're
holding
new,
on
my
to
name
low
is
mortgage
Sandra,
rates might
and
not
welcome to my
necessarily want
channel,
to
From Lack
move,
to
so they're not going to
Legacy.
be offering those
On this channel, we're all things money, investing, and mindset, particularly how to go from a scarcity mindset to a mindset of abundance. It's a learning community made up of traders, beginning traders, experienced traders, and everything in between. And so you're welcome to sit with us. That's all we do. We check in with each other. We run in, we tap out, keep up with each other's trade. We cheer each other on. We share frustrations. We shout out, warnings. And so it is what it is. But you're welcome to be here. So leave a comment in the chat if it's your first time being here. Leave a comment. Again, don't forget to press the like button. It's absolutely free. And press and subscribe. It's a tiny, tiny, tiny thing for you, but it's a huge thing for me. And don't forget, share it with your friends, because the more, the merrier. And the more minds we have, I'm telling you, I've learned so much from hanging out with other traders. They drop tips and just little reminders for me too. So welcome, 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 everybody. Don't forget, like, subscribe, share, tell others, drop a comment, let us know you're in the house. And if you have a YouTube channel, let me know. I'll come and support you. Same way. Hey, Ms. Vice. I'm pacing around my apartment trying to stretch my legs. Hey, Elle is still here. I know, Elle. Go figure. Last month it was just 500. I know. Remember on November the 11th, me and Sonia and Ali, we did our thing together, our celebration together. They had 1,000 subscribers, my big sisters, and I had 500. It's amazing. I don't know. Hey, Miss Vice. Miss Vice is back.
Then select save. The
And
existing list is replaced by the
who
new
else
one.
came
You
in?
can also create watch lists from
Is
the More to
Marilyn
Watch
still
tab.
here with us?
After creating a watch list, you can add symbols to it from different locations across
I
the
know,
platform.
it's crazy. It's crazy,
From the
crazy,
Charts
crazy.
tab,
So,
select the list icon and then add to watch
but
list.
it's been a fun ride,
From the
y'all.
Scan tab,
And I'm so
right-click
glad y'all with
security
me.
and
Don't
then
you
add to
remember?
watch
It was
list.
just like a month.
And that's how you make
It
a
was a
watch
little, it was
list.
about a month and a half
For
ago.
more demos on
I
how
know,
to
it's
Thinkorswim,
crazy.
head to the Education
I
Center on
know.
tdameritrade.com.
So I'm so grateful, you know, but it's constantly being in front. You know, you have to put out a video. You got to do a lot to keep it going. So, but thank y'all because y'all come here with me every day. That's amazing. And so that helps with views and watch hours and all those little things you got to do. And, you know, you got to have so many subscribers and so many this and that. That's a lot for an old lady. But we did it. We did it. So I'm just waiting, y'all. It's such a slow trading day. When I tell you nothing is happening, it's like watching paint dry. This is definitely like watching paint dry. Because it's like, the price has just been hovering right around the same little spot. 266.55. It's not doing anything. So that's why I've been MIA. It's like, ooh, it's nothing exciting to watch. It's just squiggles today. So, yeah, QQQ isn't even down 1%. It's like 0.1%. So, you know, that's basically sideways motion all day long. No gain, no loss, just sideways motion. I should have been expecting that. So let's see, market watch. Where is it visualized? Yeah, half green, half red. It makes sense.
Yeah, Jenny,
I didn't see that coming though.
I know Paramount's known for its strong content slate. Do you watch anything on Paramount? I know Yellowstone, 1883, 1923. I'm more of the Emily in Paris kind of person, but do you watch any of those shows?
Not a single one. I was just thinking this is the streaming service I know the least about, I think.
Yeah, me too. And it's down about, Paramount's down about 3% today, down about 47% this year. And an analyst over at Loop Capital is basically throwing in the towel.
Did you jump in the market today? I did. I got everything. I got calls and puts. I figure I'll just wait it out. So I have some January expiration dates. I got some hard enough out expiration dates. I'm just swinging. I'm just watching because, you know, what else is a girl to do? So yeah, I'll just swing those. It'll, you know, I think I got pretty decent contracts, so I got time. So we'll see.
Down about 46% year to date.
What you do today, Miss Vice? You got out. You got your money and got out, didn't you?
Especially when it comes down to media and broadcasting.
I think so. Everybody's been quiet. It's been such a slow kind of trading day. I think it was really kind of low vibe. A low vibey today.
Biggest component around 17%, with film about 13%.
This would have been a perfect one for me to sit out.
The reason Loop Capital is downgrading the stock is they see continual weakness in the most heavily exposed areas of.
So yeah, that's why I'm still kind of halfway plugged in, but not really, because I know I'm not doing anything today. I'm gonna just hold on to those.
I'm sure you've heard of a lot of these different networks, and we know that advertising.
I do need to look at our paper account and reset that. And then I guess we need to talk about some stuff we want to purchase as a community and watch. So I'm gonna be. We picked some good stock. Nothing. I entered them. L picked all those stocks that made that money. L picked Waste Management, Home Depot. I don't know, y'all. We made some decent money on those. Wait a minute. No, those were old puts. I got some puts over there. I don't know if I sold them. Probably just burning up our little account.
We also know that the advertised spend cutback is really.
You jump back into?
Like, of course, Meta. We know Google.
Oh yeah. I don't know if Frank is still in or out either. I haven't talked to him, but I know he bought 2 puts this morning. He might have jumped out though. He might have got out. So yeah, it's just been pretty. It's been slow motion and pretty quiet. So, which is cool. But I didn't get to go. I can't go to the beach today because it's raining, y'all.
It is. I mean, when it comes down to Paramount, they're not necessarily, of course, a theater outlet like AMC, but they are a publisher. In other words, they have a massive
Someone else picked Home Depot.
catalog.
Yeah.
Actually look at their balance
and
sheet, they declare it on the
I can't remember what else made us. I think Microsoft.
assets, and I think that's one
We
of the
made money on
reasons why,
Microsoft.
you know, there's value in
I mean, and we only had 5 contracts. That's what was flipping amazing. But we swung them. We parked them. We purchased them on the 9th, and we just let them sit until like a day or so before expiration. That's what's making me think, shoot, I might be swinging, y'all. I might be swinging because we bought those on the 9th of December, and that was really only like 2 or 3 weeks out. I don't know. I got to go back and look at those because that's something to consider. All those were swing trades. We didn't do anything, parked them and forgot them. Now those puts, I can't remember which ones won or, but anyway, I'll go back and look because that's some good information. But I heard Terry Eaglewoman say that too, that sometimes swinging is better. She does great reels and shorts. She said, I heard her, I want to say this was recently, saying that she felt like she fared better sometimes when she just did a swing trade, just let it sit. So, you don't see. I don't like watching it run up or run down, you know, when you're swinging. But we'll see. Let me go check on the money while I'm talking crazy. Hold tight, y'all. Let me go over here and see. See what's cooking.
Hurdle rate for next year, there's value in the company. So this is an interesting one. It's not necessarily a company that's going to go away because it's not making money. They are making money.
We're gonna be
They're
here a
just not
minute.
making as much money. And the content catalog for their streaming services needs to be built
Okay,
out.
we're gonna
That's
be here a
expensive,
minute.
and that's one of the reasons why they're burning through cash.
George, you answered this Blue
The rain
Capital
is
analyst
crazy.
question. What does Berkshire see other than a stock highly out of favor when it comes to Paramount? That analyst pointing to the fact that he doesn't think it's because Warren Buffett is expecting industry consolidation for Paramount. But how should investors be thinking about industry consolidation? Because we know there's a lot of players, there's a lot of talk that they won't all survive. So how should investors be thinking about, you know, those that will get bought up versus those that might not exist down the road?
Yeah, so in linear TV and traditional cable, I think that is essentially a secular decline. We're seeing that. When it comes to streaming services, we know there's lots of competition as long as there's diversification in the way content is distributed and the type of content that's distributed, including Showtime, which is owned by Paramount. There's value there. I think one of the other things that may be missed in the analyst call is the value of the content catalog, the Paramount intellectual capital. In other words, the legacy content catalog. That in and of itself is quite valuable, and I think that's why Warren Buffett owns the stock. And I also think the deceleration in earnings again looks like it's bottoming out in 2023. There's an expectation of growth once again in 2024. So I think it's a near-term story. I think there's weakness in the near term in stock. So I agree with Blue Capital's call. In the near term, it's not trading too far off their price target of $14. But this is the kind of situation where if they spin off the media business or even sell that content catalog, that's going to be very accretive to shareholders. Again, I'm not saying it's going to happen, but it is a possibility to unlock value.
George, I wish we were ending the show on more of a positive note with this name not being exactly a bright spot today, but I have to thank you for all of your under 30 insight all year long. Have a wonderful holiday season.
Sure.
Thank you so much.
Happy holidays to you. You bet.
Thank you, George.
We empower.
Can y'all
those who
hear the
can.
rain? It's raining pretty hard.
Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy, a measured approach.
Oh,
the right
yeah,
tools,
I know.
driving
You're welcome,
accuracy.
Marilyn. I'm telling you,
CME
those
Group, where
videos
risk
are,
meets opportunity.
I know, I should turn it around so y'all can see it. It's coming down, but this patio is pretty secure. Just make sure that, yeah, it's pretty secure. I don't have to worry about getting wet, but I do have to worry about the internet going out. I wish y'all could see this. It's so pretty.
Because platforms this innovative are just
So,
made for traders.
yeah.
They're made by them. Thinkorswim by TV.
But it feels good to be outside. It feels so good to be outside.
One of the most commonly used features on Thinkorswim.
Hmm.
Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust.
You're welcome for that. I hope those videos and stuff help. Marilyn, I really am queuing them up for myself. So like when I don't have anything to do, I just sit and kind of roll through. I really put them, when I put them up there, I put them in my watch later. It's raining there too. Yep. I don't mind the rain. I like it.
You can even initiate a trade.
And then here it always smells so, it just, you know, you can tell that it rained. You can smell the grass and so we watch, we wait, we see. You're not gonna be able to hear anything over that rain.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalini. It's 2 p.m. Eastern Time. I'm coming to you live from the New York Stock Exchange. Stocks have been mixed throughout this day, but certainly looking like another.
Yep, Johnny, you said it. You were right. Number chop today. I could have sat this one out. I'm a swing trader now.
In the meantime, you are seeing some energy, for example.
Swing trader now,
The Dow
man.
is up 83 points at 33,111. The S&P is at 3831, gaining 9 points. The Nasdaq down 8 points at 10,000.
I don't know. I think you're right. I don't know, because here when it rains, it's warm. You know, it's never cold. We walk in the rain just like it's nothing because the rain is so warm. And then as soon as the rain is done, the sun comes out, so you dry. It's the weirdest thing. Nobody really minds walking in the rain.
Australia, where some employees have staged a strike.
But it's coming down a good little
during
clip.
this time because they believe they're being treated unfairly on the job. Right now, we're looking at a Reuters report, which says
It does.
that Australia.
Because I don't know about y'all, but the rain in Chicago was cold. It just,
and workers, they announced plans to walk out from
I
Apple's
felt
retail
some warm
outlets
rain, but most
earlier
of the
this
rain when
month
it comes down
and
is
around
cold.
that country. And according
So
to
it's
this
not
report, the union
pleasant.
claims that a
Unless it's in the
2014
summertime,
agreement
but
denies workers
no, this is always
weekends,
warm.
consecutive days off, set rosters, set days
It's cool.
for work.
I'm telling you, it just
12-hour
smells so
breaks
fresh.
between shifts and overtime rates, among other things. That's
Okay.
something that
Come on,
these
break
folks,
down.
these people who are employed by Apple, they're obviously taking very seriously. Meanwhile, another piece of news, the U.S. International Trade Commission affirmed
It was pretty
that
light
Apple's
today,
Apple
too.
Watches, they have an EKG feature on them. They're saying that this particular watch infringes on patents that belong to medical device maker Alivacor, pardon me. And so that's something that could knock at this stock further. Reuters says that it's not doing this. And pardon me, the story says that the ITC
Chicago.
said imports of the infringing
I know y'all don't
watches
miss
should
that
be
call.
banned. But it would not enforce a ban until appeals were finished in a separate dispute before the U.S. Patent and Trademark Office.
Yeah, and there have been macro and supply chains and geopolitical headwinds. Apple's had a tough year. I mean, like
I
many of
miss
the tech
Chicago in the
stocks, it's down
summertime,
about
not in the winter
26%.
though. But the summertime is
Very interesting
beautiful.
on that. You're
There's
also
no
keeping
place
an
like
eye
it.
over at Tesla.
What's the call there? Well, we can't go a day without talking about Tesla, right? Or Twitter,
I know.
or Elon Musk.
Merida's the
But right
exact
now, shares are
opposite.
down,
Be ready,
and this is after
because you'll be
Elon Musk
inside during the
says that he
daytime
will
a certain
not
portion of the
sell
year,
more
because
shares of
when I tell
Tesla
you
for the
hot,
next 2
it's
years.
hot.
And this is
But
interesting
it's like two different
Tesla
cities to me,
shares were a
because
little
the
bit higher
central is
earlier
old and
today, by the way.
colonial,
But the
and then
report
when you go to
also
the
talks
north,
about
like
how the company is
Tamazon
close to picking another
Norte
location for a
and all of the
gigafactory. And then
breezas,
it
the
says that
Vista breezas,
Elon
all those
Musk
neighborhoods in the
expects
north,
the
they're
economy to
very
be in a
modern.
serious recession
And
in
you know, you've got
2023,
your rooftop
reducing
pools
demand.
and your
Now, this
restaurants
is
and
the first
malls.
known time this
So it's
year
two very
he's
different
acknowledged
cities.
any
But
kind
when
of
you're
lower
in the
demand
north, you have to
in
rely on
Tesla
taxis
vehicles.
unless
He's
you
been
have your
saying that
own
it's a
car.
delivery issue,
And when you're in
not a demand
Central, you
issue.
know, of course, you
But
get the
all of
older
this
buildings.
really
And I
does
want to
make
say that
you
it's
think
probably maybe a
how
little more
intense
expensive
is
to
his
stay in Central.
involvement
I
in
don't know,
Twitter
because we
impacting
didn't stay in
Tesla.
Central very long. We stayed
Right.
in Tamazon Norte the longest, and it's beautiful. But you do rely on taxis a lot. You know, you do a lot of Rappi and Uber, and that's just the lifestyle. But the place was beautiful, but hot. Hot. Oh, Marilyn, you live near Oak Park. Wow. All us Midwesterners. I'll get out here and see what QQQ is doing. Nothing. Nothing, nothing.
Okay, so we have a lot of ups and downs, mixed messaging. What do you think is going to be different about 2023, or will it be more of the same?
Hmm. Oh my gosh, I cannot believe what a small world it is. Miss Vice, do you know Jackie? You know my friend Jackie, who's in Merida. I love Jackie. We had so much fun when she was here. And another one of our Exodus sisters is going to Merida. Hold tight. Miss Vice, I need to ask you something offline, because there's another sister coming, and she's coming. Wait a minute, she's coming pretty soon. I need to know, can I link you with another Exodus sister who's coming to Merida next week, as a matter of fact? And I put her in touch with Jackie, but I'm sure she would love to know, who all is there. You all may be in touch already, but I will reach out to you. I'll email you. I just want to ask if it's okay to connect you to. There are a few Jackie's last name. Oh, I may not want to give it out, but anyway. Yeah. Jackie, she's a doll. Brown, bubbly personality, just an angel. And she just got there. She hasn't been there that long. She's from St. Louis. That's my friend. We had a great time together. Miss Vice, I'll reach out to you. If I don't remember, reach out to me, please, because I will forget. But there's another sister. She's coming. She just reached out to me the other day. So, yeah, see, that's how it works. And Johnny and them are going. Wait a minute. I want to make sure. Okay. All righty. I'm going to pass your info on to her. Do I have your WhatsApp info? Okay. We'll talk. I'll just give her some contact information so she can reach out to you. Yay. Because it definitely makes a difference when you get to town, if you know somebody who can at least tell you like where to go get some keys made. That is helpful. It is such a tiny, tiny world. Okay, wait a minute, QQQ. Maybe she's coming down. Maybe she's doing something.
When we think about the Fed,
Nope.
you see 50 basis points on February 1st? And then
This thing looks stuck.
You know, it's really going to depend on Congress. You know, if they pass
It's moving so slow, it looks stuck.
spending bill, I mean, that's gonna, it's counterintuitive. The feds are trying to reduce inflation, but you know, inflation is all about too many dollars chasing too good. So if we're going to dump another 1.7 trillion into the economy, you know, how are they going to react? So I think that that's going to determine a lot of how the feds react, what they're going to do, and how much they're going to raise rates and for how long. I don't think that they're going to be able to increase their target of 2%. If they do that, that's going to have a drastic negative effect on the value of the U.S. dollar.
So in the meantime, right, you expect with new lows, reduced recession, you can use that as some opportunity. When are the good days? When are the roaring 20s that, you know, we sort of got tempted with?
Just watching the birds
You know, if you look back
in
to
the trees
the tech bubble and the housing bubble,
and the rain.
you know, those people that did their homework and didn't react emotionally to what was going on, they came out way ahead and they were able to break even and start making money before most people. So, you know, being calm, understanding the positions that you're in. You know, if you have a good cash position right now, you're going to be able to pick and choose and be patient and take your time. And I think, you know, again, there's a lot of things that we have to look at, but I think in the next couple of years, you know, we could be back to what we saw, you know, a nice, strong market and a strong economy.
Right, understood. Ed Siddell, it's great to see you. Thank you very much, CEO,
Absolutely.
Chief Investment Advisor at EGSI Financial. Thank you. Later this hour, we'll get the latest deep dive on the crypto space, and our next guest for that topic, Hashdex, bullish outlook for Bitcoin. You'll want to hear all about this. Then we'll chat about Coca-Cola distributor and providing a dividend opportunity. You want to hear about that in our panel, ready to recap the latest consumer sentiment data. Shows a little bit of good news. I mean, how does inflation affect folks in 2023, though? And Netflix, Wynn Resorts might continue to be very resilient stock picks for your portfolio for 2023. We'll explain. Stay with us.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting drawings, drawing tools, and then type of drawing. For symbol comparisons, select studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
When traders tell us how to make thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders, they're made by them. thinkorswim Trading from TD Ameritrade. It's a 13-hour flight. That's not a weekend trip.
15 minutes to report.
Take off.
Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Thanks.
We'll see you. They're getting so smart.
Choose the app that fits your investing style.
To the watch list, I'm Nicole Petalides, live on the floor of the New York Stock Exchange. I have a few movers here for you in the market. Got to focus on some of these names. Lots of analyst moves for CarMax following yesterday's earnings report from CarMax. Most of the analysts lowering their targets, including B of A, slashing to $49 from $100. Shares are up today, but the auto retailer is struggling. At the end of the year, down 50% for 2022. To the downside, Paramount Global. Loop Capital downgrading the streaming name to sell from hold. The analyst slashing the price target to $14 from $30. This year's biggest blockbuster movie, Top Gun Maverick, debuted on Paramount Plus this week. Now to the upside, Charter Communications. Well, Wells Fargo upgrading this telecom stock to equal weight from underweight. The analyst cut the price target to $340 from $370. Leading the S&P 500 today, oil companies. Back a big rally that we saw in crude oil prices. The energy sector is leading the markets. It has done so all year. Chevron, Exxon among the top performers today. And we'll dive more into today's move in energy with Ben Lichtenstein a little later in the show. And of course, every single day we check on Bitcoin. Right now, 16,830, up 0.5%. Let's welcome in our next guest. Eddie Gifford's with us, wealth advisor at Tactiv. Thanks for being with us. I don't know, maybe we'll get a Santa Claus rally. Technically, it's supposed to be the last 5 trading days and the first 2 days of the new year. But what are you thinking? Are we going to see some pops or volatility?
I think that everything that was supposed to happen this year has done the exact opposite. We get through the first 6 months of the year and we're down 20%. And it's like, well, the market has always gone up when that's happened. And then we're sitting here in December and we went up and we came back down and we're flat again. So not ruling out a Santa Claus rally, but if we look at the first half of this month and we look at the downward slide, you can see that there's a lot of downward pressure. And so it doesn't look like Santa Claus is coming this year. I hope I'm wrong, but that just doesn't seem to be in the cards at this point.
Right, understood. I know you have some stock picks. I don't know if they sort of fit into your big picture look at the markets, but names like Netflix and Wynn are some of the names that you do like. How are you feeling about the market overall, and where do these names fit into your thesis for maybe it being a good pick?
Well, I think that the market is going to do what the market's going to do. We know the market goes up and down. We know that there's periods where it maybe makes more sense to plant seeds and buy stocks. And maybe there's other times where it makes sense to kind of play a little bit more defense. And so I would be defensive minded right now, but I was a big wrestler my whole life. And so I'm also a big believer in counter offense. And so we're always looking for those opportunities. And I think that you have opportunities in both Netflix and the Wynn. Netflix, it's been very resilient, especially in the back half of the year. They're cleaning up a lot of things, so we think that could be really good for the stock. There's momentum behind the stock, and they still have, a lot of their own content and seem to be ahead when it comes to that type of stuff. So they do definitely have the ability to grow. They do, in fact, clean up the password sharing and next year. I think that you see their accounts grow a lot more than anyone realizes. So I think that with a few fixes and the fact that their numbers are trending in the right direction, Netflix could be a good buy heading into next year.
Yeah, I mean, when you look at Netflix, it's down like 51% this year. I mean, it's certainly been beaten down. Do you think Netflix, just because the footprint that it has and people still view it as the leader, if they're going to get streaming, it might be Netflix and something else versus cutting out Netflix?
Yeah, I think that no one's ready to give up their Netflix, to be quite honest. So if they have to make a choice, they're probably going to choose Netflix. There's a little bit more, I guess, loyalty there. They've had it for a long time. Some of the other streamers, quite frankly, are a little bit gimmicky because they just fit like a specific niche or a specific pastime. So I think that Netflix is probably the most well under program out there. So streaming wise, for people that have to pick, if they do have to pick, they're probably going to choose Netflix. But the nice thing about streaming compared to the old cable days is that you can pick and it's still much less expensive than the old cable days. So you can get the content that you want, and Netflix provides a lot of it to you.
Right. And even though there's been a lot of criticism about the ad tier rollout, it was rolled out too quickly. It's not getting the same traction that was expected in the meantime. And I know we've even been seeing some fluctuation in the subscribers, but as you said, a leader there. Then there's a name like Wynn Resorts, which really has had a wild ride in 2022. I see a high of 96, a low of $50. Year to date, it's down 5. 1 year, it's down almost 10. It's sort of in between its highs and lows, sitting around 80 right now, closer to the highs. Do you think it's on the way up?
We think Wynn's on the way up. We think that, honestly, like a lot of the casino stocks, and I mean, I'm not just saying that because I live in Las Vegas, but, the Wynn has always been kind of like the first one to come out of these things. They offer a very, very good product. They have extreme brand loyalty. And, I've been down there on the strip or by the strip at least and seen like how busy everything still is over there. And so I think that, people are still spending money to come out here. People are still, looking for that like different type of experience. They're still looking for that getaway. I know that everyone is probably looking for a getaway after the year in the stock market this year. And so, Vegas is an affordable way to do that relative to a lot of different places. So the Wynn is a good opportunity, we think, here.
Yeah, what's interesting is you said do some tax loss harvesting, adjust your investment strategy. There's still some things to be done because things could get worse before they get better. Is that sort of what you're anticipating? I mean, a recession, some new lows, perhaps?
Yeah, I think that 2022, what you really need to do, this is December, it's time to go back to the plan and really look at what's going on in the long term. And what we want to do is we want to take advantage and get rid of any losers that we're maybe holding on to for one reason or another, take advantage of that from a tax planning perspective with the realization that things are probably going to get worse before they get better. The rates are still high, inflation is still sticky. We don't hear anything about CPA for a couple more weeks. And the Fed has some big decisions to make next year. So I think what that means is a lot more volatility, especially in the first half of the year. I do think we go to new lows, but I think there are opportunities along the way.
Right. And then let's get to your ETFs. You have one that is related to gold miners and the other one is more of a hedge, a long-term hedge. Tell me a little bit about these two ETF picks.
Right. So I think that you still have a lot of fear when it comes to inflation. People still don't know how we're going to come out of this thing and what exactly is going to happen. And are rates going to keep going up, or are we going to fall into a recession and the rates fall? And so in that scenario, something like the gold miners is going to be a really, really good play. Good for two reasons. One, because they're going to be producing more gold because of the current market environment. And two, because there's just going to be a flight to value, which the precious metals typically are the recipient of good things in that scenario. On the other end of the spectrum, we've got a ETF called NOPE, which is more of a macro view with a more short view of the market right now. And because of that, it's shorting a lot of individual stocks. So if someone is concerned and wants to hedge their portfolio, but they still have certain stocks that they might like, well, let someone who's really good at it pick the stocks that might unfortunately go out of business, and you can add that to your portfolio to hedge against a disaster.
Right, understood. I mean, we didn't really talk about international at all. Do you look to the international market sometimes in your career? Is there a space for that now, or is it you're just really more U.S. focused in general?
I don't know if it's U.S. focused, but we're going to look where the money's going and where the momentum's at. So, one thing that is definitely on notice right now is that emerging markets have done really well relative to the S&P 500 and relative to U.S. markets in general. So keeping your eyes in those spaces, you have to. At the end of the day, as a financial advisor and as a fiduciary, my job is to find the values and see if we can go ahead and find success for clients, whether it's in the United States or not. We've leaned a lot more heavy over the last 10 years into the US because they've kind of been the only game in town. But it is probably a good time to at least pay attention to what's going on outside the United States because they've honestly been better than we have this year.
Right, understood. Eddie Gifford, great to see you, wealth advisor at Tactiv. Thanks for being with us. Coming up next, after a big decline that we saw in 2022, what happens for 2023? What's in store for crypto investors? We'll talk to the team at Hashdex, get their outlook on all things Bitcoin and more next.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcast and start learning today.
I'm Nicole Petalides coming to you live from the New York Stock Exchange every single market day, from the opening to the closing bells. Tune in to the TD Ameritrade Network.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network. Welcome back to the Watch List. I'm Nicole Petalides. Joining us right now to talk about crypto and all things that are related is Marcelo Sampaio, CEO and co-founder at Hashdex. Thanks so much for being with us. So first tell us more about Hashdex. You have an ETF, DEFI. Explain to us, what it is that you can tell us here with that.
Well, Nicole, it's a pleasure to be here. So we are a global asset manager, completely focused on crypto. We serve, traditional financial market investors, with top-notch crypto products, structured products. Basically, everything we do is simple, secure, and regulated. So we help, investors that are in traditional financial markets to actually, get exposure to crypto, in a high-quality way.
And at this point now, we've seen crypto, they call it the crypto winter. Let's move the FTX aside. Just the big picture. We have the crypto winter. I know there are cyclical downturns, but the last time there was a crypto winter, which was back in 2018, took Bitcoin down 75%, followed by gains of 2,000%. So it doesn't mean that Bitcoin's over here, right?
Absolutely not. So that's the thing. It was not only FTX, so we had many deceptions in this 2022 year. But the thing is, despite price, and all this centralizing, most of the centralized, players failing, it was a great year for crypto. If we look all the things that matter, so adoption grew, the technology progressed a lot. A number of jurisdictions came forward with their regulatory frameworks, positive regulatory frameworks. So actually, it was a great year for crypto. In so many ways. 2023, honestly, it's supposed to be even better. So if you're a long-term investor, really looking, not too really affected by price, short-term price, it was a great year, for crypto. So we should expect that not only Bitcoin, but a lot will happen in the space, and things are getting better actually.
So let's get to what you would put money to work in, okay? It's great that more people adopted and got crypto and the technology progressed and regulatory environment seems to be improving. People wanted more regulation on crypto, and that was something that they wanted clarity on. I think the uncertainty was an overhang, and I think we're still working on that. What do you like? How do you make money in crypto? So
there are so many fronts at this point. So we could start with let's say like the old guard blockchain, so Bitcoin and Ethereum both, like, so their case, the investment case is getting so much stronger.
Same here, Johnny. I think so too, because I think it's just
instance,
going to
like
kind of
Bitcoin,
fizzle
like
out the rest of the day.
It
just,
Lightning,
we are,
it's
just slow today.
In terms of hash rate.
Thank you guys. I feel the same way. It's 2:30 now. I don't think anything's gonna jump off the rest of the day, y'all.
With the Bitcoin network.
So
Ethereum, for instance,
I'm just gonna let it play out.
Into the merge, which was a
you guys have a great holiday if I don't talk to you guys, if I don't see you. But I don't think QQQ is going to do anything. I think it's going to do just what it's doing. I think it's going to consolidate right on up out of here
the staking,
for the rest of the day.
We have so much happening in these two networks.
Yeah, I would be surprised if anything happened. If anything jumped up, I would be surprised.
I would say that 2023 is the year that we're going to see more and
more. QQQ is flat,
even
flat,
cases,
zero gains.
So NFT space,
1 penny. It
it's
definitely
1 penny. So
all that time,
I think the gaming industry,
nothing.
Especially with the top, like companies right now, like they already, like position, or they are positioning themselves like with decentralized like blockchains projects with like as their main infrastructures. You have like NFT as identity. You have social medias. Like pretty much more and more going to having decentralized options using blockchain. So there's a lot going on, like, so DeFi is the last one that I would mention, but DeFi is another one that is fantastic. And I would say that is more and more integrated into traditional finance. So anyway, there is so much happening, like that is even hard to pick one or two, but it's really vibrant what's going on in crypto right now.
Right. Would you advise against any of the investments? I mean, if someone said I want to get BitO or I want to get, maybe some of these stocks that have exposure,
Happy holidays,
like
everybody.
Or Square.
I think I'm gonna cut out early today too. I'm gonna let this thing play the rest of the way, you guys. But I think I'm gonna cut out of here. I don't think any QQQ is gonna do anything, and I'm going to swing my contracts until Tuesday. So I'll see everybody back here on Tuesday. You pop some popcorn.
Thesis is around really like crypto itself. With that
I
said,
know.
Really
Yeah, Marilyn, I'm gonna be doing the same thing. You see, I got my blankie. I think I'm gonna go lay down on the couch, watch some TV. You said that's so wonderful. I might pop some popcorn, watch a movie,
if you don't have a thesis, like
and
buy
just
the market,
chill,
buy an index, like,
and just slide into the
really
holiday.
Buying a small portion to begin with, and stay
So if
very
I
long.
don't see you guys,
That's
I will
really,
see
the case is
everybody
super
back
strong,
here on
and
Tuesday
the odds, like,
or
the way we see the
Wednesday.
world,
You
like,
all
is
take
that,
some time
like,
for
a
yourselves.
fantastic
I will
investment.
talk. Happy
But it
Kwanzaa.
lasts around,
All right, guys. I'll
in
talk
our
to
view, like,
everybody
around
back
really the
here on
companies that will benefit
Tuesday.
from that.
Take
That
care,
would be
everybody.
a lot,
Bye, Miss
right? But it's very hard to
Vice.
say like how
Bye,
that
Marilyn. Bye,
value.
Marilyn. I'll see you
Well,
guys
let me
back
ask you
here on
this, because
Tuesday.
I know you're looking
Happy
at
holidays,
blockchain
everybody.
and the backside